Nice one. So we'll just wait for StreamYard to catch up real quick. Give people a second to be joining. We've got 11,500. We've got 44 likes. There we go. We've got some people in the chat. And we should be live in about 3 seconds.
I can't see the chat.
Okay, so if you look on your phone on the YouTube app, all right, we're live now. Guys, welcome to the next 24 hours. Matt, hit us.
Welcome, everyone. Welcome. Hope everyone's pumped for the next 24 hours. As you can see on the screen, we've got a couple of legends here. We've got Chaos. We got Thalas. Everyone knows these legends. Yeah, Lux Algo. Who's keen? Put your comments in the chat, and we will get started shortly. But first of all, we'll just go through a couple of housekeeping things. I think we should call it. Chaos housekeeping.
Definitely.
This particular 24, if you guys have been on them before, we've run them for 24 hours straight. What we have found is everyone gets very, very tired, and there's only so much coffee everyone can drink. Particularly Dave in the back end, he literally sits up for 24 hours straight. So everyone needs to give him a big round of applause. But this time we're cutting him a little bit of slack, and we're having a little bit of a break in what we call the dead zone. A lot of viewers. It was our lowest viewing time slots. So if you guys have seen the schedule that's been floating around on social media and on Discord, you'll see that between 1 a.m. and 6 a.m. GMT, there is going to be a break. So that's time for you guys to have some sleep as well, to pull out a fresh notebook and to get going, get recharged and get ready to go. So yeah, what we're going to do now is we're going to kick it off. We're going to get going, and we're going to open up with Chaos. Is going to talk to you guys a bit about Lux Algo and how much the subscription costs, what are the benefits, and all that sort of thing. And then we're going to go into the nitty gritty of what Lux Algo is about, how we use it, and Simon and I use it in our everyday trading. But we both use it slightly differently. So you get to see what it's all about, and then two different perspectives on how to use it. And we often arrive at the same result. So yeah, Chaos, go for it, bud.
Let's do it. Right, guys, slightly different this time. We've got some new offers. We've got some new setups. Lux Algo has changed the way that they're doing things. The original package was called Premium, okay? Still, you can subscribe on a monthly basis, and you can still get your money back, which is very cool, after 30 days. I'm just going to move on to a different screen so it looks like I'm looking at you guys. So obviously you've got a monthly cost or you've got an annual cost. If you pay annually, you get up to half off. But as I say, this 30-day money back guarantee is awesome. I'm now in touch firmly with the developer. It's a great bloke. He always listens to feedback. So if ever something you're not happy with, give us a shout and we can feed it back to him. We've also got an essential package now, which is basically order blocks. Okay. You know that from the way that we use this, we've got order blocks. We've got the matrix oscillator, which is the stochastic RSI, cash flow, and all the other things built in, which Matt's going to go into later. We've got order blocks, and we've got the signals and overlays. If you guys want access to everything, this is the package that you want. Okay. I assume that one of our admins is going to throw the link into chat. Maybe I'll just assume that that's going to happen. We've got a link which offers the best possible price that we can get for you. So hopefully that will appear shortly. I know a lot of you guys took the Lux Algo package on the Black Friday deal, which is awesome. It was really cheap. So that was cool. And then finally, we've got the Ultimate, which is basically the same as these two combined, but there's a new back testing strategy. And what this does, this is absolutely unbelievable. They've gone back through all of the data, all of the previous trades. They've spent a lot of time back testing, putting all the wins, the losses, the huge wins and losses and stuff that didn't quite make it all together. And then you've actually got the ability now to literally load this in by a whole separate set of indicators. So there's a back testing system for all three of these. I'm not going to bring it up today. It's a huge amount of data, and I haven't had time to go through it. So all I'm going to do is, if Matt's happy, I will start you guys off with this. Should I start them off, Matt, with this?
Take it away, mate. Take it away.
Cool. All right, let's go. So Premium package gives you access to signals and overlays. The way that you load these in, guys, is when you've got a fresh copy of TradingView, it will kind of look like that. You'll be like, oh, I've got nothing. So you go indicators. This is once you've bought the thing through the website and you've linked your TradingView, you have a lovely section down here, invite only. And all you do is you're going to click on this one and this one and this one, and it will load them here, and you just show them by clicking that. All right, the eyeball. It's very, very easy. And it'll be the same down here. This one will be defaulted. No, that's the wrong one. This one will be defaulted to show. Hang on a sec. Let's get the right one again. There we go. This one will be the one that's default showing once you've clicked it. So that's how you load them in. Okay, right. So if you followed us, you will know that we've been talking about this for about 6 months. This is the signals and overlays section of Lux Algo. And what this basically is, it's a way to help you trade, but you can't solely rely on this, because if you do, you'll get wrecked. But the idea is you get long signals, you get short signals, you get an indication as to when the market's turning. You know, it gives you a trend. For example, we're in a trend now, we're in an uptrend, so it's green. And then perhaps before it went red when we're into a downtrend. There are multiple ways that you can trade this, and they are as follows. Settings. Here we go. You click the settings wheel to bring it up. If you're a scalper, there are presets for you. If you're a swing trader, same again. If you like to trade against the market as a contrarian, same again. And there's a whole host of options. What I'm going to do is I'm going to leave it on none, because all this is a combination of these. Now, what I'll show you is if you turn stuff off, watch this, it will disappear. Same again for the dashboard. This thing down here will go. The combination that I have been teaching people that works for me is simply trend catcher, reversal zones, and dashboard. I'm just going to make this dashboard big so you can read it, guys. Hold on. Cool. Okay, off we go. Right. Okay, back to this. So this is what it looks like once you've turned on those 3 things. Okay. Now, what I want to show you today is on Bitcoin, just to give you an example of how it works. If we were at a point of the market down here, okay, and I'm not using any other section of the indicators, we use the matrix element of it to obviously use as complements. Just for today, and in fact, not even for today, for the next 5 minutes, I'm not going to use nothing but this. And this is how it works. You've got 2 reversal zones. You've got the red one, okay, which is this. And you've got the green one, which is obviously below. All right. These zones, everything in between, which is this here, all the black space where all the price action occurs, is your typical price action. Anything that goes to an extreme point can often just reverse. So, for example, if you're trading this particular downward market, we'll touch on all the other bits in a minute. Price action started off up here near this zone, bounced off hard, in we went, we got a rebound, and then it came down again. We got a rebound up to the next zone and then down. And the idea is it gives you something, depending on what the market's doing, like a zigzag between the 2 zones. Okay, guys? And the idea is as you approach one extreme, you can maybe think about trading in the opposite direction. Okay. Just like today, like, I mean, if we look at this today, it's a perfect time to show you this. So the idea is you bounce from top zone to bottom zone to top zone. And then sometimes when it's super bullish, it will hug, and it'll keep hugging until such time when you get the bounce. Okay. Now, how do we know that? You've got these. This here is a long signal. All right. I'm actually just going to check my settings real quick. I'm going to change the settings so it's accurate for the chart that we're looking at, and I'll explain this in a minute. Here we go. So here is a previous trade that was on the 15th of October. So it's almost 2 months. Okay. Bear in mind, this is on the daily, sort of 40 candles have passed. Here was a long. Okay. You've got a number here, 213, whatever. The higher the number in theory, the greater the trade. So there was a 1, it didn't really push up. There was another 1, it didn't really push down. Suddenly we got a 3 and it shot up here. Then we got a 2, it was a bit of a nothing. We've had another 3 again and it's moved again. Okay. The way that you read these is you go, there's my long. What is going to tell me that the trade's coming to a halt. And I'll show you. There's a previous long. This here is like a take profit, okay? You get an X to say that the trade has been moving hard, and now we're kind of weakening off a little bit. It's going sideways. Still going up, but it's still going sideways a bit. Along with that, there was a second X. So what you've basically got is you've got a trade here, and you've got 2 TP points from the trade. And then you know there might be a short coming. So what does that mean for the current trade? Well, there was a long, nice strong long. We've actually had 2 TPs. So what might come next? We might find that when Matt pulls up the oscillator later, that you'll probably find that it's kind of peaked off just a little bit. In fact, I'll touch on it for a sec. There you go. There's the oscillator. It's already given us a bit of a down signal. So I'll let Matt cover that later on. So what this tells you is you had a long, you had a point at TP, you had a point at TP. It's getting to the point where it's tired. We're in the reversal zone. We've just seen that the oscillator has given a tired signal. In this trade, we have made on a 10x 200%, on a 1x just 23% for Bitcoin. This is a pretty big move, guys. So yeah, that's basically telling us that there might now be a short which is due here. So what we might get is a short here, and then, you know, shorting in a bullish market is never normally a good thing. It may only pull back to there, then we get a long, and then we go again. So that is what I'm looking for when I am starting to trade using this. Matt, do you want to pop in with anything at this point, or shall I carry on?
Can you hear me? I think I've frozen.
We hear you, man. Let me check the feed. Let me check the feed.
My vision, you can hear me now?
Yeah.
Yep.
Yeah, I can hear you, but you're not moving. Can you just turn off your background just for a second and put it back on? Shall I?
My whole computer's having a heart attack.
Okay. Shall I carry on? Let me carry on.
Yeah.
If you need to reboot, then I'll pull you back up in a minute. No worries. All right, cool. All right, let me carry on then. Okay, no worries. Oh, you're back now?
Yeah, there we go. Back.
There we go. I think it might be your background, mate. The background really slows down the refresh, mate. The refresh rate. So, yeah, did you want to add anything to that? Did you get all of that, or was it frozen?
No, it's all good. Yeah. No, I could hear you. I just couldn't.
Okay.
Nothing at my end was working. So.
Oh, fair enough. All right, that's fair enough. Well, I mean, this gives the guys an idea of what the signals look like, which is this here. If I just move that for a sec, you've got different ways you can use it: long, short, long, or you can turn on the AI, and it'll give you a strength, basically, guys. So that is the first thing. Now you need to know how to actually use this. If you remember this dashboard here, it brings up this. All right. Now what you've got on the dashboard is optimal sensitivity, and what that is if you move the mouse over it, it's the 150 most recent bars. Each one of these is a bar, and it tells you this number here, what it feels the most optimal sensitivity to put in these boxes, and you can change it. Watch what happens behind the charts if I change that. So if you look here, everything will move when it catches up. Give it a second. Come on. Maybe I have to click OK. There you go. Now everything's moved. So the idea is Lux Algo isn't configured until you change this setting based on this on every single time frame across every single coin. Okay. So that's what you need to know for how to set it up. I'm going to touch on one more thing, and then I'm going to hand over to Matt. And that is as follows. With Lux Algo, the way that I'm teaching to use it, and you guys can hear me all week long at the various different places that we cover it, is this thing called the train catcher. Okay, if I turn that off, you see that the line that was running through the price action is now gone. If I put it back on, it comes back. One of the ways that you can trade really very effectively, and I'm going to show you something that will blow your mind. Hold on. Okay, here we go. Make sure that the settings are correct. They are. Okay, here we go. So if we go back to the start of the last bull market, which I think most people hopefully will agree, we're somewhere near there at this point now. If you have Lux Algo configured and you've practiced and you've learned how to use it, you can know that your train catcher, which is green here, had a slight red, but nonetheless, it's been green the whole way. You've got an option of trading this train catcher from the bottom right the way up to the point where it goes red, okay? Which is one way to trade using this. If you've done that, apart from this, where you may have gotten out and then gotten back in again, but let's just assume that it was clear. This was a 250% move. You've also got the alternative way to trade it, which is my favorite way, is you go from signal to X or signal to signal, whichever one you like. So you can go signal to X and you can choose whether you take the first, the second or the third. Sometimes it prints a fourth, but that's quite a new feature. Or you can just go signal to signal. So if we went from, for example, this candle to the short, we would have taken on a 1X somewhere in the region of 130, maybe even 120% move. It's a huge tool. You can't use it by itself. You've got to use it in confluence with your other methods of charting, which Matt will cover. But this just shows you, and then here we go again. There was a long there, and then the closure of the signal there. If you went from this candle here to there, it's another 60% move. You're on basically on a 1X, 180% just on these two trades alone. And then when the market reverses and your MAs flip, you would have exactly the same thing here. You've got a short, so you can do it in the same opposite direction as well. That would have been a 40% drop. And then you could have done it again for the second leg of the bull market. Just by learning how to use this tool, essentially what you're doing is you're getting stopped out every day. You need to be timing the market to understand how to use it. These are the moves that you want to catch from there to there and from there to there. I mean, it's absolutely mind-blowing. If you can get these right, you're talking, on a 10X, 500-600% moves, guys. You can absolutely make so much bank with these moves. So this is what I wanted to basically show you guys today. Matt, are you back?
Yeah, mate, I think so.
I can see you. Do you want to? I'll tell you what. I'll bring you in on the order blocks.
Yeah. So that's what I was going to say, mate. Is moving along to order blocks, which is the second part of that package, I guess, is talk about how you bring that into your strategy as well, and then I'll talk a bit about how I bring it into my strategy. I'll come
down into the 4 hour in that case.
Yeah.
All we are doing, let's bring it lower. It's going to be quite hard to explain because a lot of these order blocks get mitigated, but let me see if I can do it. Hang on. Right, with order blocks, guys, they're blocks of orders, as they are known. It's not just from the likes of you or me trading, it's the likes of institutional traders will pick up a point where they would like to enter. There'll be orders that are left over from previous times that the price actions hit there and they weren't collected, and there will literally be blocks of orders. And what price action tends to do is quite often, let's find a ranging market. Now, the order blocks are gone, okay, because these have already all been mitigated. There would have been one there because obviously this is where it wicked up to. There would have been one probably here. Then this one would have been a remnant of that. So you'd have been back. So this would have been there. And then what essentially price is doing is it ranges from block to block to block to block. And the idea is you can use the order block system, if I now come back to the current time, to actually go, right, well, where's price going to go next? I'm currently, I've been in this block. You see it entered there. I then came down here. You can see there's a block here because it would have been right the way across. Back up here, there would have been a block here, then back in here again. And the idea is it mitigates them as it goes. Now we're at this point, and I'm like, you need to find out where the trade's going to go next. And what will happen is it will magnetize to the blocks, like so. I mean, you might get a move down, you might get this move before it carries on. But one of the things that order blocks do is they give you an idea of where price action is going to go next. This, for example, here is an order block that's left over. Price has been here. If you look here, price came here, it took the orders from here, and then it's left again. So what's left? You've got an order block here, which is this long rectangle, which now price can now come back into to collect more liquidity. So essentially, we don't know which way it's going to go yet. This is why you link it up with signals and overlays and the matrix oscillator, and you try and form a full picture. Right, Matt, over to you, bud.
Yeah, like I've been saying a bit lately on some of the other, AMAs I've been on and stuff, is that trading is about like trying to you're coming up with a hypothesis. So you're coming up with an educated guess, I guess, on how you see the price action playing out in the future. So you're using past information, these indicators and stuff. You put it all together and you come up with a strategy on what you think is going to work. So that's where Lux Algo is amazing as an indicator, because it has the ability for you to adapt the indicators that they provide for you to suit your own methods. So you can go and use all three of these in abundance and have it tell you when to take trades and stuff like that. You can do that. So it literally tells you when to buy, when to sell. However, some people don't want to do that, and people like to incorporate more traditional trading in. That's what I do, is more traditional charting, I should say, into the picture. But I still use them because it gives me another tick in the box. It doesn't always work because the market does what the market wants to do. And I shared a dot trade with Chaos a couple of days ago. Seven points of confluence that said it was going to move how I expected it to move, and it went completely the opposite way. And I had 7 reasons using Lux Algo and traditional charting, fibs, everything, and it still went the opposite way and stopped me out.
Yeah.
But with good risk management, not a problem. Move on to the next one. But you have to establish these plans on how you think it's going to play out, and you have to have a number of reasons before you take the trade. So anyway, that's why we go with all these indicators, right? That's what the point I'm trying to get to is we go with all these indicators to give us the confidence to take the trade and to lift our win rate, so that we're winning when we're losing. So
the market's here to humble you and to take your money and to wreck you and to ruin you. All you're trying to do is even the odds.
Absolutely. Yep. Like I had seven ticks in the box. So all of the methods that I use for my trading, every single one of them was ticked, and it still went the wrong way and stopped me out. So that's just the market.
It's like they do it on purpose, isn't it?
Yep. And it's just the market.
Definitely.
And then the next couple of trades you take, it all goes according to plan. So anyway,
it's all worth it.
We use these tools to give us more confidence in what we're doing, that it's going to pan out correct. So anyway, I'm going to move on to how I use order blocks as well. So I like to look at, like traditional charting stuff. This is a Coty chart. The reason we brought up Coty is that we noticed that Phantom is pumping. Phantom and a lot of the other older coins that have come through the bear market. So some of the older projects that pumped in the last bull and now have weathered the storm of the bear market are now starting to accelerate up a little bit, and they're forming like a bit of a cup and handle pattern. We've seen it on AVAX. We saw it on Ethereum. Phantom has done it and pumped, and now we're just looking at Coty, because Coty often runs with or after Phantom. So I'm going to get to the order block bit in a minute, but basically, we're looking at this cup and handle situation here. If we draw this little sweep in here, you can see that the price action represents a bit of a cup. Then you get the retracement, which is the handle that forms, and then off we go. It starts to pump. There's a measured move involved in this. So when you end up breaking through that level in here, there's a measured move. Now, the measured move is basically the depth of the cup itself, okay? And then this is where the order blocks are going to come into it. We want to look for areas of resistance, which I've marked out just based on price action. There's an area of resistance here, and then there's also an area of resistance up a little bit higher. All right, so I've actually marked that out earlier just to give us an idea on what's going on. So if we take the measured move, which is how a lot of people like to trade, gives them, again, confidence that what they're doing is there's some method to what they're doing. You're going to take your measured move across basically the depth of the cup. So let's just put that line in there. Then you're going to take from there down basically to the bottom of the cup. So let's just do it roughly like this. And then we're going to move that line up to the handle. Basically where it breaks that flag, which is somewhere around there. So that's where it breaks this diagonal trend. If we drew a trend line in as well. I know it's looking a bit like a 4-year-old painting, but anyway. So it's basically formed this flag down here, which is the handle. So the measured move's basically that move there. And look at that, it comes up price close to where this resistance level is. Okay, so as a guide straight away, you're like, okay, you know, we could keep going up this high. Is that a legitimate resistance area? We've had a little bit of price turning around at this point. So we go to the old Lux Algo and we turn on the order blocks and see what's going on in that. And that's just one of the tools we can use from Lux Algo on this. That's signals and overlays. That's not the right one. There, bang. So what happens? We turn it on and look what we got. We've got a nice juicy order block right on that resistance level. And, you know, looking at this order block as well, it's of a size that will interrupt price action. You know, it's a decent size. And you can see here by the lines as well. And did you mention this before when I was freaking out about my screen?
You mean about whether you're about the green and red, the lines? Not yet.
Yeah.
No, I thought I'd leave that to you, mate. All yours.
Okay. So this is kind of like I don't know the best analogy for this, but it's kind of like if you've ever been into video games and stuff, and you've got you know, your character is using up its battery, and as it starts to use up its battery, it just starts to light up the lifeline here, and saying that you're using too much food, and therefore, you know, you're going to soon run out of energy. So basically, what this means is the green. If the green is larger than the red, it means that the bulls have had to work hard when price has gotten to this point to try and move the price back up again. So what would have happened is prices come down into here, the bulls have worked really hard and they're trying to send it back up. So they have had to use up a lot of energy. Okay. So what we're going to likely to see at this point is this price is going to come up and potentially reverse, because the bears haven't had to work so hard. There's a lot more of the bear orders left or the sell orders left. So it could actually be a rejection point. And I say could because it's a 14% order block. 14% can affect the market. However, bigger than that, like, you know, 15, 25, those are the ones that will actually definitely have an effect. But you can't say definitely when you're talking about trading. However, it's something that you take into consideration when you're looking at where's your take profit point. So for me, you know, you would definitely look at, and I said definitely again because I would definitely look at this as being a reversal point somewhere around here. And I've also learned
I definitely agree.
don't get too like focused in on the exact dollar or cent that you're going to take profit at. You know what? If you're getting close to it, and you have been in the trade for a while, take the money and run. Definitely take the money and run.
Mate, they liked your analogy. I'm just looking in the chat on YouTube. Someone said it was a sick analogy.
Oh, really? Yeah.
Yeah, I loved it, mate.
From video games, you know, when you're running and you're running and you're running and you're looking at the indicator to tell you when you're about to run out of juice. You know,
I use the old car where it's filling up with gas, and then obviously, you know, the more you use, the less you've got to give. But same thing, mate. Yeah, cool.
Yeah. So that's sort of, you know, that's one way to use order blocks. You know, there's other ways to use order blocks as well. You know, obviously you can use it in conjunction with when you're pulling fibs and stuff like that. Like you mentioned earlier, Chaos, is you're looking for, you know, order blocks at areas, you know, like this and stuff. You know, when there's a retracement, is there a fib at that point? Is there an order block sitting at that point? You know, so there might be one from back here, you know, still sitting there.
There will be. If you turn it on, mate, it will probably be there.
Oh, let's just have a look and see. I've got no idea, but let's just see. Oh, look at that.
Yeah.
So there you go. So over time, you start to actually recognize these points where order blocks are likely to happen as well. So what this indicator does is it actually teaches you how to recognize patterns and certain things that are happening in the market before you even turn the indicator on. It's just that when you turn the indicator on, it then also becomes glaringly obvious to you. So it really does make you a better trader, and you don't rely on it. You know, I mean, how many hours have we spent stuffing around on this Chaos trying to work out the best way to use this and the settings and
ridiculous.
You know, that doesn't work and this works and
mate, unlimited amounts of hours. It's got to be in the hundreds collectively. It must be. But then you can now recognize the patterns without turning it on, which is ironic, really.
Yeah, it does. It makes you a better trader, but sometimes you just can't see the forest for the trees either, and so you have to turn them on. And then it's why the hell didn't I see that before? You turn it off and you go, there it is, it's right there, so it's really good because it makes life easier for you, and that's what it's about, right? Trading, if you can make trading easier for you,
even the odds,
happy.
Even the odds just a little bit, isn't it?
Yep.
Definitely.
So so that's the order blocks in a nutshell. Is they're there to help you pick up those points where where the liquidity is lying, or the bigger liquidity is lying, I should say. And it's, I think Chaos mentioned it before, they're like magnets, and the price does like to bounce between those levels. So, you get an order block, you get a high time frame moving average, you get a fib level. That's just like licking the lips sort of stuff,
It's also worth mentioning, as these order blocks are mitigated or zeroed, for want of a better word, they do disappear. What you can do with this new Lux Algo backtesting is you can put them on a timescale basis. So you go back to the 12th of November or the 15th of October, and you can see what order blocks were live on that day. And you can bring the candle up and you can go, right, price is here. There's my order block. Well, what's going to happen? And you can go, it's going to go up. And then you play it and it goes up, and then you get an understanding of how they work. So this is how the back testing is really useful, guys.
Yep, brilliant. So moving along, mate. Unless you got anything else to talk about with the order blocks, we'll just move along, eh? What do you reckon?
Nah, it's all good, man. Let's do the favorite bit, shall we? The matrix.
Yeah. So we'll the oscillator matrix is the third part of what they offer you in their product. And I use it absolutely in every single trade. This indicator is on my screen 100% of the time. The stock RSI is a key part of my trading as well. And then the other two things, the signals and overlays is part of it. I more flick that on, adjust the setting to whatever the table tells me to set it to. I have a quick look, then I flick it off, and I go back to my normal charting. So I just use it as a quick head check, I guess, to make sure that what I'm thinking in my head is actually what they're telling me as well. So it's just a confidence check. But the oscillator matrix is a big part of it. This helps me with a lot of my decision making. So yeah, I rely on it quite heavily. So it can be quite confusing, but it's once you break it down into its chunks and you don't focus on too much of the noise, it's very, very easy to follow. So the first main bit of it, and you can actually just go into the settings here and shut down a lot of this stuff, actually, which might be the best way to do it.
Do you normally mess with the settings? I don't think I've ever touched the settings in that indicator ever. I love the way it comes. I love the way it comes in the box.
Yeah. And
are you looking to just take some of the stuff out to show the guys?
Yeah. All right. I've basically gotten rid of the upper and lower confluences and gotten rid of the divergences. So now basically what we're left with is two main features of the oscillator matrix. So it's obviously got the word oscillator in it. The oscillator is this line in the middle that, not surprisingly, oscillates up and down throughout the range. And it's set up like an RSI in the fact that it gives you, the range between 100% and 0. Okay. And you've got, the midline at 50. Also on the midline at 50, you have another little indicator built into this, which we'll talk about in a second as well. But basically the oscillator itself in the middle here, they call it a hyperwave. So their technical term, probably because the other stuff is trademarked or whatever, they call it a hyperwave. I don't know all of the maths behind it compared to an RSI. But basically, you can see if you compare it to the stock RSI at the bottom, it most of the time follows a similar pattern, okay? And that's one thing that I look for when I'm taking my trades. I look to see before I take a trade, like if we were looking at this retracement here on the handle of the cup, I might look for a fib level for the retracement, but at the same time, I'm going to look to see, is the stock RSI at the bottom? Is the hyperwave at the bottom? If they're not telling me the same thing, I might be more hesitant before I proceed with the trade, okay? It doesn't mean I won't take the trade, but it may just give me, you know, I may enter the trade on a much smaller position, okay? But in this case, they're both at the bottom, so that's a tick to me, okay? So that's 2 reasons why I think the price action may rise. Also, it might have retraced to a fib, which I haven't done, but it may have. So anyway, yeah, I use the hyperwave to tell me, does it line up with similar levels on the stock RSI? Also, what level is it at in terms of a number? Often as well, if the hyperwave is sitting at below 20, same as with a traditional RSI, it's usually a good indication of an upward move because you've got it being in that more of a oversold position. Okay, so the token is, you know, in an oversold position, and people are going to start to potentially lift the momentum on it and start pushing it upwards. Okay, so that's the hyperwave. So you can use it in a similar fashion to like an RSI indicator. Okay, now they have other little things. If you notice, there are these random little dots and triangles. They also throw that in as part of their algorithm to tell you that, you know, it's an indicator that looking like it may be reversing. Okay, so it's like a would you say reversal indicator, Chaos? Is that the right sort of way?
I think so. It's just used similarly to the reversal zones. It's just got to a point when momentum is in theory going to reverse and shift back to the opposite side.
Yeah, and sometimes you get these and you get the green dot on the hyperwave, and then immediately after you might get a grey dot or something like that. So it could be indicating a little fake out. So you again have to note that they're there, but then you have to decide how much weight you put on it. And that comes with some experience as well. And it comes with looking at combining that with other things you see in the price action and on the other indicators and stuff like that. So yeah, that's the hyperwave. I use it in conjunction with the stock RSI. Like I said, I try to get the two to line up in as similarly as possible before I take a trade. That just sort of tells me that you know, another reason that these two separate indicators with separate algorithms are both telling me the same thing. So it gives me more confidence. And then the area in the middle here, the red and the green, that's a money flow indicator. So what that is doing is that is sort of telling you in what way is the money moving through this project. So, and it often ties up with what's happening with the price action. So if you see this big bit in the middle here, the money is actually moving from a green section. So money was positive, it was above 50, and then the money starts to leave the project. What happens immediately above? The price starts to come down. So it makes sense. Okay, the prices come down, money flows leaving, oscillator is coming down, so the hyperwave's coming down. So that's telling you that the project really is losing momentum at the moment. People aren't interested in going long, and it's basically running downhill now. Okay, as it then switches over past the zero, this other little red line appears here. There's a green one on the other one on the previous positive move. Now there's a red line. Now that's the threshold line. So that's a line that the algorithm has established that says money flow within this range is to be considered normal volume for this particular token at this point in time. Again, don't know the maths, but that's what they've deemed. So sometimes when you see the money flow pokes its head outside of the threshold line, as you can see here, I'll just get my little marker here. You can see it's done it here. Okay, it's done it on the next green section. Just done it up here. So that means that money is moving out of the project in this case at a greater rate than what they were what they would consider to be normal. So that's a sign to go, okay, it's definitely not losing steam. I would anticipate that this project continues to price action to move down. Okay. And then in the reverse case, when the money is flowing back into the project, it's moving up in a positive manner, and it means this one here, it's above the threshold line, or aping line, as Simon likes to call it, the aping line. And it's a really good description because it does literally mean people are aping in. People are putting more money into this project than they deem to be the normal acceptable amounts. Okay, so it sort of tells you that there is a bit of hype on it. Now, the oscillator matrix and the money flow do not always line up. And that's also another reason why you might be hesitant to take a trade, because you go, okay, it's gaining momentum. However, money is still flowing out. That's a thing for me that I look at and I'll go, okay, I'm not going to touch this because it's a little bit indecisive. If you then correlate that to the price action above, yeah, the price action is moving up a little bit. It comes back down again and so on. So it's kind of a little bit indecisive with what's going on. So it's something that you can look at and you can be cautious about, However, you see this move down here, you see that the oscillator has gone down to 25. So it's a fairly deep pullback. And as it's hit that bottom level, the money flow has started to now turn around and starting to move positive. The oscillator matrix starts to turn up as well. So that's a good sign. Money flow is positive. Oscillator matrix is positive. You're getting a few positive candles. So now you're starting to piece together these things that are starting to line up. Whereas back here earlier, money was flowing out, but the oscillator was pointing up. Price action was kind of up, really big red candle, then a little bit up, a little bit down. So, that's where you now start to learn by using this oscillator matrix without even looking at price action. You can look at that and go, well, that's a mess. I'm going to ignore that. I'm going to wait a little bit longer because I just don't like how this looks now. I'm going to wait for more candles to print, more time to pass before I decide when the next point to enter is. All right. So also another thing is when you see the money flow, so this is just another point on money flow. When you see the money flow here hovering around without ever going over the threshold line, that signifies that we're basically in a little bit of a ranging market. So you can see here that all it's doing is basically just going up and then down a little bit, up and then down a little bit, up and then down a little bit. All right. And then it ended up basically where it started at the same price because the oscillator matrix did exactly, the money flow indicator did the same thing. It started off at the midpoint and ended up back at the midpoint again. Okay, so that indicates that there's just indecision and the price action is just going to waver around accordingly. All right. So obviously the greater the angle of the money flow, the greater the impact it's going to have on price and stuff like that as well. So yeah, often another thing as well is often when you see these darker patterns here, which signifies like almost like it's beyond aping. There's just so much money flowing. It's like an overflow. When you see these overflow things come to an end, so if you start to see it print and this overflow area ends, you'll often see, and I say often, the price will actually start to reverse. Okay, you'll start to see things reverse at that point in time. So that's something to keep in mind of. I don't use that a great deal because they're not always around on the chart, these things, but it's something to note. If you do any back testing, you'll see that when those big overflow things start to disappear and turn, often there is a decent little retracement in the market or a pump in the opposite direction as well. All right. So that's the money flow indicator and the hyperwave. They're the two things that I use mostly on this indicator. I'm just going to turn on the confluence meters as well and the divergences. So the third thing I use the most on this is the I've stuffed it now, chaos.
What's up? What's happened?
It's all right. No, I got it. The third thing I use on, sorry, I was just backtracking what I've done. The third thing I use mostly on this as well is the divergences, because we really like this indicator for the fact that it does give you the divergences. It prints them out. You don't need to look on your RSI or your stock RSI or anything like that. And you don't have to draw any lines on there. It does it for you. Okay. So you see here, this is a bullish divergence that's printed out. You got a bearish divergence here that's printed out. So quite simply, if you just look at this straight away, it tells you that red line indicates a bearish divergence. So if we then translate that onto the chart, what you see is you see the oscillator matrix gets to its highest point, it retraces and then puts in a lower high. If I mark out another vertical line here, you'll see that the oscillator matrix has put in that lower high. However, what has the price done? The price has put in a higher high. So what that means is you've now got this bearish divergence. So even though despite the token increasing in price, it's clear that it's now in a downtrend. It has put in a lower high in terms of its momentum oscillator. So it's starting to lose traction, and it's only a matter of time before it could change direction in price and start to retrace. And that's what it exactly did. Okay, the oscillator matrix continued down and it retraced in price. Okay, it wasn't a vicious downward thing. You can see the number of wicks to the downside where it got bought up, okay, when it hit levels. And you can also see that that's due to what the money flow indicator was doing. The money flow was a bit indecisive. There was a real big battle going on between the bulls and the bears at this point. The bulls were trying to buy it up and the bears were selling it off. So, yeah, that's the divergences in a nutshell. The same thing on the bullish divergences. It prints, a higher low, but yet the price action was lower. So that tells you that a bullish move is imminent. Now, it didn't really extrapolate out to much. However, it's definitely a divergence because the price is lower here, but yet the oscillator matrix is higher. So they're there. It's a graphical picture, so it shows you how clear it can be. And that's a really handy thing. And out of various, again, other things that we've tested, we have found that, again, the divergences with Lux Algo are actually really good and really solid. And they paint well, and they usually play out very well from that as well. So why would you want to draw it on your own chart when this is here doing it for you and it's doing a good job of it? So we really like to use it.
Definitely.
Yeah. And I don't know how many you've checked, Chaos. I've checked a few, but it's definitely the best one that I've found so far.
Oh, yeah. I use a lot of different tools. This is by far the best. Just when you're done, Matt, I'll bring up the screen and I'll show you a trade that I recently took and how it played out. Yeah, cool. One last thing, guys, just on the money, on the oscillator matrix. Sorry, these things at the top, the bars at the top and the bottom, they're confluence bars. I don't use them at all, but they're basically just paint different colors of green depending on whether it's a bullish move or a bearish move. And then at the bottom over here, at around the 9th of June here, you can see it's painted that green triangle I mentioned earlier. It put in a green dot. So they're kind of those little signals there that can tell you that, hey, a bullish move may be happening because the oscillator's put in a low, and so forth. And it's done it over here at the start of that bearish divergence. As it started to make its way down, it printed a high on the oscillator of 96%. It's put in a red triangle to signify that, hey, be aware, something might start to reverse soon. So they're not buy and sell signals. They're just little exclamation marks, if you like, that are color-coded that sort of tell you to be aware that it's either going to, be a bullish move or a bearish move. And sometimes they get cancelled straight away by a different color, like a gray dot or something will then cancel that out. So, yeah.
So I hope that makes sense to everyone. Yeah, reach out to us if you need any more help with that. What do you got for us, mate? What do you got?
We've got 10 minutes. Why don't we both bring up a trade? Do you want me to quickly bring up what I've got?
Yeah, you go for it, because I'm like, I'm liking the look of this cup and handle for now.
No worries. Okay, so guys, I just very quickly want to take you back to a dot trade that I took on the 24th of November, which was about 2.5 weeks ago. Okay, I'm still in it. And the reason I'm still in it is I got a strong opportunity to go long. Okay. At this point, I was just looking at this. So we're just going to focus on this real quick and just make it so we can see everything. So we had a dot. Okay. And this might have coincided with a call that Sheldon made or somebody else, which is why I took it. There was a previous trend down. This is like a flag, if you like, that was flagging down. And then what basically happened is we kind of pushed out. So there was a long signal. We'd already visited this ribbon, okay, which is this green ribbon here that I mentioned, the reversal zone. So what should happen is price should come from the top ribbon down here and back up into the top one. So that was the next thing that was satisfied. I got my long. I had my ribbon, so I actually went long here, and then I said to myself, how do I want to trade this? And I decided that I would wait until one of these appeared. So that was currently 25% to go on a 10x, which is a 250% move. Now what I'm waiting for is either one of these, which we've already got, we've got 2 of them, to appear here, and I will jump out on the 3rd X, because that's a really strong indication that price is ready to reverse, or I shall jump out when one of these appears up here. So what I'm basically waiting for is either of the 2 indicators. And then what I've also done is, as I've gone, the trade's gone here, I've moved my stop up. The trade's kind of bounced around a bit, then it's pushed up again, I've moved my stop up. We've got another push up, okay, we've got a push down, and we currently here, my stop is currently below this. So this is at 5.7. Even if it comes down and hits my stop loss, I'm still 11% up on a 10x, which is about 100% move, which is a huge trade. So what I'm really waiting for is I want to see another area where it's going to maybe do that before we get our sell. And then all I would do is I'll come up again to below this. Whoops, excuse me. I'll come back in somewhere below this previous stop loss. And at this point, I might expect to get stopped out, because we will have hit a bit of exhaustion here. If I bring up this to use as confluence to show you guys, currently what this looks like is we've been from here, we made our move down, which is fine. I was trading this, but it reset. We had a push up, we've had a push down. All in the meantime, price action was red and the price didn't move, so that's fine. And then we went green, and now things have started to move. So we've had a push up. Cash flow is now outside the AP line, which Matt mentioned to you is this area here, guys. Whilst we're outside of this line, as in this area here, people are APing hard. As soon as price comes in, comes back down into this zone, it's probable that will line up with one of the 2 markers that I'm looking for. So at this point, you can't go long now, because obviously it's gone. But this is a typical way that I'll take a trade. So I took the long, watched the cash flow, and now I'm simply waiting for my exit point. So I just thought I'd show you that. So this is a trade that I'm currently in. Like I said, we're sort of at the high point. Where are we? On a, let me just check that again. That seems very high, but it might be right. Hold on. Yeah, no, on a 10x, it's a 260% move. It's huge. If you can use Lux Algo and you can use all these elements to bring the ultimate confluence to the way that you trade, it's an absolute no-brainer, guys. It's a really great way of making money. All right, Matt, do you want me to bring you up screen? If you've got anything. If not, we can close out soon.
No, I don't really have any charts. I was just looking at a few cup and handles. We had the Phantom one, and then the
definitely. And the I'll tell you what I'm looking at, which might sort of leave people to give something to look at. I'm looking at stacks, okay, just on the 8 hour for now. And this is what I'm looking at currently. I wasn't in this trade, which was a shame. We've had a beautiful buy, beautiful green trend line, which has been green the whole way up. We then had that. If you'd have been in this trade, you would have made 70%. I mean, I'm kicking myself for not being in that, and that's fine. But what's of particular interest right now is we're making our move down at the minute. Okay, we've come out the reversal zone, we're coming down. All right. What I'm looking for is this, which happens to line up perfectly with this, to come down. Okay, we're going to have the RSI coming down. What I can also see is we're on the absolute edge of going negative with cash flow. See, it's gone red. You can see the red just coming in now, right? Confidently, this is also coming. So there is going to be some more downside. What I'm looking for my next trade is to see where this comes to. I'm guessing somewhere in line with this support level. And then what I want is I want RSI to reset, and then I want the next push. So that will translate to something like this, and then we'll go again. I don't tend to short a bullish market, but what I will do is find the absolute best entry point along it. So that's what I'm looking for in stacks. So if you guys have got Lux Algo, follow this, wait for the short to finish playing out, wait for it to give you a long signal somewhere, the nice green box that we've got here, wait for this reset, wait for the cash flow to go sort of at the low point and start to go positive again. And that's the next trade that I'm looking for. All right.
Yo.
Yeah.
Hey, Chris.
Inside? What's up, Matt?
Hey, buddy. You're right.
Hey, mate. How are you?
Fantastic. Man. It's great. It's crazy you're looking at stacks. I was just looking at stacks myself.
Oh, were you really?
Yeah. I mean, if you pull up the stacks to BTC chart, because you know that stacks and BTC love to run together. And
is there a pair? There is a pair.
When you're 120, you can see that it's actually the 100 and 200 day moving averages have just crossed, and stacks BTC has just bounced off of it. So that
which ones? What was it? The 200.
You can just 100. You can pull up my chart if you like. Otherwise, yeah, if you put the 100 and 200 day moving average.
Does that look like yours, or should I bring you up?
Just pull mine up there for a second.
Oh, I see what you mean.
Yeah, so there's your 100 and 200 day moving averages, the green and the orange. And you can see how they've just crossed, and we've had that retrace. So if I pull
let me pull your screen up, man. Let me pull your screen up. Hang on. Hold on.
You've got my screen up. Yeah.
Okay, cool.
So you see, if I pull, and then if I do some Fibonacci science here, and I pull the fib from the bottom to the top, I've got the 618 retesting. I've got the 100 and 200 day moving average crossing also as support, and then we kind of come into that trend. So I'm looking for. I'm also looking at either to get confirmation of a change in structure, or for this to kind of play around in this area a bit. But if Bitcoin takes a push through on the 4 hour, then stacks could do the same. Will probably do the same, and take some strength from it. So,
mate, it looks exciting to me on that chart, which is why I brought it up. I had no idea you were going to show that.
I was keeping this as my play for the end of my hour, but then you put it up, and I was like, I can't now keep this till the end. I need to show it now.
I promise you, I had no idea. I'm sorry.
It actually goes in line, Chris, exactly what we were saying earlier with, you get a fib that's sitting on a juicy spot of two big time frames, two big moving averages together as well, and then it's sitting on a trend support as well. Like it's just made for you to trade, and it's awesome.
Yeah. So on this, I'm gonna be going a bit into my strategy and how I'm playing this move actually on my session with the guys now. But essentially, I still like stacks is that token for me that I find it really hard to play it on anything less than the 4 hour because it gets really wicky, Yeah,
it does.
So I can see that potentially we're going to get strength coming in on stacks, but I'm kind of waiting for that sort of liquidity wick to the downside to fill the majority of the position. Nice. Like I want to get my position when everyone else gets stopped out.
Good man. That's what I love to do. So you've got your entry down at somewhere near the
So
bottom of the
that's
stop.
why I've
I
got
like
this
it.
like big stop loss area, and I'll take really small
Nice.
entries on the way down, and then get something larger on the EMA on the
Mate,
618 if we get a retest.
You're trading like a market maker, man. I like it.
Hey man, one day my account will be a market maker. But,
What do you mean one day? It already is.
Yeah.
Okay, right. It's handover time, guys. Thank you very much for having us.
Yeah, thanks everyone.
That has been
Well,
awesome.
thanks for the session, man. I learned so much about Lux in the last hour, more than I knew from any YouTube video that I've been able to find. So you guys are absolute legends.
Awesome. Well,
No
I'm going to
worries.
stick around. I'm going to stick around.
Yeah.
Matt, you've been amazing as ever.
I'm going to go and have some more food, and I'll see you guys again in, I don't know, about 8 hours from now. I'm doing one on risk management. So guys, tune in if you want. And
Definitely.
yeah.
Awesome.
All right.
Take it away, Chris.
Have a good session, Chris.
Thanks, Max. Thanks,
Get it out of the park, mate.
Cheers, brother. Yeah, Sai, welcome to stick around with me if you can.
I actually can't. I've got to go and jump in the car. I'm going to tune in from my car.
Okay.
I see Terry Lynn's here in the background. Terry, are you available to jump on? Can I get a thumbs up or a thumbs down?
Mama Terry, bring her up.
Should we? I don't know whether she wants me to add her yet.
Oh, okay. Let's see. If she wants to come, she can come.
Oh, there we go.
Hello,
Hey, Terry. Chris, have a good
I
session.
I'm backstage. Of course, I want to come up, not just
VIP access. Sometimes it's cool to just sit back there and like watch from backstage. You know, it's like being
VIP tickets,
a VIP. Yeah.
Yeah, exactly.
Okay, cool. Thanks for joining me, Terry.
No, that's cool.
So I'm gonna
Chris, I think we can't see the YouTube chat. So what I'm going to do is I've got YouTube up in the background, and I'm just going to keep the chat going. And if somebody asks a question for you or something like that, then I'll just kind of, ask it for you. Is that okay?
That's perfect. That's absolutely perfect.
Fantastic.
Okay, let's bring this. Okay, cool. So, I don't think that worked like I wanted it to. So I'm just going to keep it like this. All right, guys. So what I'm going to be doing with you guys today is a bit different from my previous streams with you. We're going to go into a bit more in depth, a bit more like next level when it comes to how to trade in a way that manages your emotional state. Like in the previous streams I've gone through with you guys, we've done, we've gone through trading psychology. We've gone through setting sort of targets on your trades to get in and out within 3% on the trades, identifying what sort of range you're comfortable trading within, and we've gone through different trade setups. What I'd like to do today is essentially help. This is a strategy that I built some time ago, and it works really well for me. This is a strategy for prioritizing your P&L over the profit that you're getting out of each trade. It's so that we can consistently de-risk our positions and also consistently take profits out of our positions that we get, so that we significantly reducing our risk without moving our stop losses into a position that's going to that doesn't necessarily disqualify our trade. I think the first part of this is quite often we will take a trade and then as soon as we're in profit, we want to move our stop loss up. But then what happens is we end up putting our stop loss in a position where you're not actually disqualifying the trade. The price can move to your stop loss, and then you're not disqualifying the trade. Then the trade moves without you. Like, can I get some show of hands just in the chat? Like, how often does this happen to you guys, where you enter into a trade and then you get stopped out, and then after you get stopped out, then price does exactly what you're predicting it to do? I just want to know, like, is this something that just happens to me, or is this happen to you guys as well? So I'm just looking at the chat here, and I just want to know, like, put
So I see you can see the chat, Chris. You've taken away my job.
No. Please, Terry, do it for me.
Yeah. Well, while Chris is reading it, everybody smash the likes. I see that we got 250 people watching and only 208. Come on. Look at us. We both put our hats on for the likes, guys.
Okay, so I'll leave the chat to you, Terry. Sorry.
No, it's fine.
So think about this, right? If you can consistently de-risk your position and consistently be taking profits, you're prioritizing your P&L. You're prioritizing taking profits. And you're moving away from the pump hunting strategy where you're entering a trade. You're taking a position that's too big for what you should be taking. You're risking too large a percentage of your capital, and then you then get that move of like 2-3% on the chart, and you're like, this thing's going 10, and then what happens? It turns around and it stops you out. Like, does that happen to a lot of the people here on the stream?
Yes.
Yeah. How often does this happen to you guys? Like regularly, occasionally, like. How is everyone here doing in their trading? How is everyone doing, Terry? What are they saying?
They're saying like often happens, very often.
Okay. Then I think that this is going to be a strategy that you guys can appreciate and enjoy. I will make the slides available on Discord as well after the show, so you guys can go through it. There's also going to be a recording of this, so yeah, let's jump into it. All right. So I want to start off with a quote. Okay. Now this comes directly out of Trading in the Zone, which I went into in depth with you guys in the previous marathon. So successful trading is about understanding and managing probabilities, not certainties. All right. So this means that if you can firstly identify that you're trading a probability, not a certainty, then you can you move away from the component of going, okay, cool. When a trade goes against me, now I must revenge trade because evidently the market hates me and it only moves against me, right? You get rid of that. You understand that by understanding that it's managing probability, not certainty, you're saying, well, I have no understanding of who else is in the market currently. There is a probability that, in accordance with my technical analysis, that price will move up. Therefore, I'm going to take a long. But if the price moves down, then that's also cool because there's actually no certainty that it was going to move up. There's nobody in the world that can tell you 100% where price action is going to go. Right?
So, Chris, one of the comments says, that's what I fear. Getting stopped out. And this is what Trading in the Zone is all about, isn't it? It's about the fear. It's the emotional. And that's what we all have to work at. It's not, like we can all trade because we've got the knowledge from sniper school and whale school, but it's the fear of, do I take it now? How is it going to go? And that's exactly what Chris is doing. It's brilliant stuff.
So on that, I'll get to that in this presentation when it comes to like the pain and pleasure index when you're entering a trade, and if you enter into a trade and price action moves into your stop loss area and it's painful, then the probability is that your position is too big. You need to already have accepted that the trade will lose before taking the trade, and then be comfortable in order to be comfortable when price needs to breathe a bit into your red zone before moving positively or moving to your stop loss. So like if you're feeling pain when price moves into your stop loss area, not necessarily hitting your stop loss, but just into that red zone, into the negative, then again, this strategy will be quite useful to you. And this is why, right? So essentially what we're doing is we're laddering into positions, right? So now you're not going to take 100% of your position. So at entry, now imagine this as a graph, okay? And I'm going to go into some graphs with you guys as well at the end. I just want to give you overall sort of understanding before we get into that. So now you're going to space your entries, essentially taking 3 to 5 entries into a position. So that means leading from where essentially you believe price will reverse, right, until where your price is, where your thesis on the probability of price action is disqualified, right? So price breaks and closes below the low, then you're going to be creating a new lower low. Therefore, you're not having a change in market structure, and the price is going to move further down. So get out of the trade as quickly as possible, right? That's where your stop loss has to be. Okay. So imagine now laddering into that position, and with that, you're going to essentially be DCAing in to a lower point. So if price now hits your initial entry and then moves lower, now imagine what that does to your emotional state as well. Now, when you're currently taking one entry into a trade, right? You're like, okay, cool. Price is going to hit the 618, right? Price comes down, hits the 618. Okay, you get your entry. Now price continues to move down and breaks trend a little bit, not closing, but breaking trend a little bit. Okay, then what happens? Now you all of a sudden you start to panic, and emotionally you're like, I was wrong. It's breaking trend, and you get that wick. The wick comes down, gets another one of your entries. Now you have those extra entries down there. All of a sudden you're like, I'm getting a better entry. I'm getting a better entry. My trade is not disqualified yet. All that's happening is I'm increasing my position size, and I'm getting a better entry from a dollar cost average perspective. And then when it comes back up and closes and takes the move, you haven't accidentally or incorrectly closed your position and panicked out of the position because
Chris,
you were not willing to accept the red.
Can I just ask you to just explain quickly when you say take another position? So you're obviously taking a second trade. It's the same token, just the second trade, and then it merges together. Just there's some people don't understand how to do that. So if you could just give a brief little
cool. Let me do that quickly then. So I'll jump across over here. So just understanding that you're going to have multiple positions, right? So if you're going to come across to, let's just set up this quick Bybit account here, put $100. And let's say we want to now take a long position, right? Now, if, for instance, you were looking at that chart, okay? Now, if you come across over here to the tools, you would be able to, and I think what I'm going to do is I'm going to bring up stacks over here, okay? So now imagine that you want to get into an entry. Let's bring up stacks over here. So you want to get into this entry, okay? Now, to jump in over here at 101.01, you can see what's happening on the 4-hour candle, okay? The RSI is at the bottom, and you've got trend. I also showed you guys just now on the stacks to beat Bitcoin chart. We are holding the 618 against Bitcoin, as well as we have come down to retest the moving averages, okay? Now, to just jump in over here, you then got quite a large stop loss to move down to. So instead of putting in 100% of your position at 101, right, what we're going to rather do is say, okay, cool. I believe that price will range between the 5, the 50, and the 618, okay? And we might get that other retest down into the EMA, right? So between the EMA and current price, I want to then ladder a position. So that's from 9418 to 121, right? So you can come back here to tools. You'd go to scaled order, and you'd say 0.98, right, to 1, right? Now, that means that between that zone of 1 and that zone of, let's say 9, not 9.8, let's say 9.4, okay? Then you can choose the amount of orders that you're putting in, that you're going to be laddering into the position. And you can then say, okay, I'm going to be So let's just put that as 100 for now. Okay. That means that the position size, the cost, right? Let's make that a 10x to make this simpler. Okay. So now you've got 100. That gives you 5 entries. It gives you the entry levels, right? That those 5 entries will be placed. Okay. Putting 20% of your entry at each one. You can also come and adjust this later, but it also then what it does is it gives you an average entry price of 0.97, right? So then on that, you could then come back and you can readjust that to 0.97. So that means if all 5 of your entries are hit, that's going to leave you with a 5 point. That's going to leave you with a 5% stop loss. If your stop loss is, let's see, let me just fix this quickly. Okay. All right, so you're giving yourself a bit of room underneath that EMA for the wick to come down and tap into it. Okay, and if it does that, you would get all 5 entries, with that then gives you a 5% stop loss on that wick down. Right. So once you've got that, okay, you've got that entry at 0.97. You can then come to a tool which is called the cryptowinrate.com. Right, so we'll get into this just now as well in the presentation. So let's say your trading account is now $1,000. Okay, your stop loss on the position, if you were to ladder in with those 5 entries, is a stop loss of 5. Okay, if your risk tolerance is 2% and your leverage is 10, you can calculate that and say, okay, now I can open a $40 position, right? Spread out over those 5 entries in order to get an average entry at 0.97, right, for $400. So essentially, if price action moves and does what I would predict it to do, I would end up with a $400 position. If it doesn't, and it then pumps from where it is right now, right, that means I'm only going to end up with 20% of my position. But we're now, what we're doing here, guys, is we're prioritizing to have consistent get winners, not going for pump hunting, not trying to make like 50% on our account in one trade. Like you can go from 1,000 to, especially when you've got an introductory account with you're starting a new account, you want to try and keep your risk to a minimum. And until you've managed to compound a certain amount on top, and then eventually you can then start taking higher risk trades. You can start moving it up from a 1% and then you trade. So you're trading from 0.5 all the way up to like a 2.5% risk on capital within your trades. But when you're getting to that level, guys, you're really trying to, you're doing that with profits that you've gained. So the initial stages where we're compounding, right? If you, for instance, were to take 100% of this entry here, right? Now you wanted to take your trade 100% up here. There is nothing to say that this trade is not disqualified. That wick can come all the way back down to the 618, right? Because Stacks loves to do that. And then it can come back, close, and continue its move. And that's so by taking your entry here, just because the indicators are saying that there's a potential move to the upside, right? You're not getting your you're actually getting stopped out, and then the move is happening without you, instead of potentially only having 20% of your position in before the move takes place, right? Now, coming back to, where do I want to go now? Where is it?
Chris, aren't you lucky to have 2 beautiful blonde women with you today?
Right.
Oh my word. Hey?
I'm surrounded by beautiful women.
Yeah, oh my word. We're trying to get the woman power in the crypto space here.
What's up, Luva? Didn't see that you had managed to join us. Thank you.
Yeah, hello. I want to congratulate everyone who is here. And what I can say, I can see an Abanta.
Ah,
Can
nice.
you see? Can you see? The Santa Claus arrived.
I love it.
Early.
That's
Congratulations, everyone, because we made it. And I think the Banter team was amazing. That was just an outstanding this year. They made all the right moves, all the right calls, and we are so appreciated to be here, everyone. Yeah, hello.
So where do I get myself one of those t-shirts, Luba?
Do you know what I got from the Poundland in UK?
Are you serious? And it said Banter Clause.
And I grabbed straight away. Do you know when I get last year, and I kept for the right time to wear it. I don't know why, I just grabbed one and was in my wardrobe for all year. And now there we are. The Banter Clause is here. Can you see?
I love it. Chris, I've got a couple of questions for you. Sorry, Luba. Okay, number one, do you know if the let me just see, BitGet does the entry like you did there, the scaled entry?
I don't know. I don't choose BitGet. I use Bybit and KuCoin.
And I can't remember what indicator. Did you use the stochastic RSI or the RSI?
The stochastic RSI.
Yeah, I thought so. Okay.
Yeah, this one over here, that's the stochastic RSI at the bottom here.
I thought so.
Yeah.
Okay, thank you. What you're doing is amazing. Thanks, Chris. Everybody's loving it.
Okay, cool. I'm glad to hear it. Okay, so essentially what we're doing, just to jump back into my train of thought here. So by laddering in, you guys are able to manage your emotional state, right? If you only get 20% of your, like, let's say you wanted to take this trade and you have now accepted a risk of $20, okay? So you're comfortable losing $20 on the trade. And then you only get 20% of your entry, right? Now, if you only get 20% of your entry and then the price starts moving, now you're only actually risking $4. So all of a sudden you can sleep more comfortably. You're making less money on the trade, sure, but you're also risking a lot less on the trade, and you're prioritizing your P&L over the individual trade instance. You know, like you're becoming the casino and having with risk management instead of the gambler. And I think that's where we're moving into now with this presentation, right? So risk management, okay? So essentially you're protecting your capital. So you're using proper size, stop loss orders to manage your risk effectively, okay? So this is where you kind of getting to from the probability instead of certainty, right? And also you're getting your laddering into positions instead of taking all of your entry in one go, right? What you can also do though, guys, is if you're on an exchange that doesn't offer this option, okay, is you could come into Trading View, right? You set that, you bring up your ruler, okay, and then you can set your orders individually. So then that will give you your midway point, right? You can then get your other points, the other side. Sorry, let me take that again. It just had this thought actually while I was, okay, so that would be there. And then you've got your top, your middle, and your bottom. And then you do the same thing here. You would take your measuring tool. So I mean, Bybit does it quite nicely for us. But if your exchange doesn't offer it, you can then do it like this. And there you would have it. You'd have your 5 entries. You know that midway zone of 0.97 is where your dollar cost average would be if all 5 entries are hit, right? So then you can then bring that down onto that area, bring your stop loss into a zone that's kind of where underneath the EMA, underneath the trend line, underneath the 618. That's where comfortably you feel that if it breaks that level, you are going to push further down, and then you can enter them manually onto your exchange. So yeah, Terry, I just had that thought for guys that are on exchanges that don't do it.
That's amazing. Thank you.
Okay.
This is brilliant. Thank you. A lot of people ask how to do this, so this is amazing. Thank you so much, Chris.
Cool. I'm glad. Okay. So managing risk is your edge. Okay. So if you guys, if you wanted to start, I'm going to ask you this question actually, because I feel like too many of us as traders are gamblers. Okay. And if you're a gambler, the only difference between a gambler and the casino is risk management, right? Now, a casino, if you look at a business model, right, and somebody goes to a VC and they're like, okay, guys, I want to start a casino in Vegas. I need $1 billion, and I'm going to open up this casino. Here's the plans, right? The probability of them opening up that casino, at least raising the capital to open up that casino, is extremely high, right? I mean, like, in order to find somebody to invest in a casino, it's not that hard if you've got the know-how and all that sort of good stuff, right? But imagine having that exact same conversation, and where you go and you sit with these VCs, and you're like, guys, look, I don't need $1 billion. I just need $1 million. I just need $1 million, and I'm gonna go to the casino and gamble with it. Will you give it to me? You know, like, who in their right mind is ever going to give you money? And yet, for some reason, as traders, we adopt this gambling mentality, right? Instead of the casino mentality. We come into the market with certainty instead of probability, and then we end up and we take positions that where we are so certain of the market moving in a specific direction, and then it moves against us, stops us out, and what happens? Now we revenge trade that position. You know, we jump into that position again, going, now it's definitely going to go up from here. I put my stop loss in the wrong position. And then what does it do? It does it again to you, you know, and that's what the market's built for. You know, that's why it's here. It's here to take your money. So if you're not going to be the casino, then rather just go to the casino. You know, you've got better luck playing roulette at the casino than actually trading. 100%. You know, the market is the casino at least gives back with 100% certainty. They always give back 95% of all the money that comes into the casino. The casino gives back to the people that gamble in the casino, right? But it knows that 5% of its revenue is always going to be profit. In the markets, there's no such rule. It will take 100% of your money, and it will do it over and over and over again. And it will give no money to anybody unless they deserve it, right? Unless they are managing their risk effectively, so that your losses are small and your gains are big, right?
And that's why we have Sniper School and Well School to teach us how to be clever with our risk. And 100%. Yet, when I go into the Discord channels and I see the trades, I'm seeing 250x, 100x, 50x, and I'm going, oh my hat, people. No, where's the 3x and the 5x?
Let me show you something here, Terry. I'm going to show all of you guys so that next time you see one of those 200x candles or 200x positions, and I'm literally going to do this as just to show you guys something, right? Okay. Now I'm going to
tell me I'm wrong now.
I'm gonna take a long here. I just want to take a long here. Okay, I'm just gonna take it long. Okay, now I've taken a long. All right, I'm currently up. Oh, now I'm down. Okay, now I'm 10x. Okay. So now I'm up. I'm up 0.6%. Okay. See how I just doubled. So it just doubled, right? So I just changed. If I take this down to 3%, now I'm changing. All I'm doing here is I'm just changing the leverage, right? Okay. I'm just changing the leverage. So I'm changing my margin here, and that by changing that margin, by changing my leverage, I'm affecting my margin, and by affecting my margin, I'm changing this percentage here. So now, if I take this stacks candle, it's showing me that I'm down 0.4%, right? Now, all of a sudden, I'm down 3.5%, right? So now I'm on a 20x, but and it's 3.5%. So that works in the opposite direction as well. Now you get to get a trade, right? So now I can put that, let's say this is at 5x, right? and I do this trade, and I put my stop loss and everything, and then the trade moves positively, right? Now the trade moves up. Then I just reduce the amount of margin that's in my account that's on this position. So I'm freeing up capital in this account in order to then take another trade by increasing the leverage up to like a 20. Now I only need $5 here in order to keep this trade running, right? Okay. So and now I've got
one of those heavy
95.
leverage trades the other day in the channel. I'm sure I saw you posted a very high leverage trade the other day in the Discord channel.
It was an AVEX long that I built for 2 weeks.
Okay. So you had moved your stop losses up and everything.
Yeah. No,
so that's a different situation. Yeah.
So that's laddering. That's where you're building a position. I'm going to close this now. I don't want to lose the money. I just wanted to show you guys that, right? So, you can have a position that's actually what you can do is you can increase the leverage on the position, right? It's going to reduce the actual percentage of your capital that's in the trade and give you a very beautiful, and the tile can be massive. Like I saw a tile on Discord the other day. It was a 10,000% on a Solana trade 200x, so if you got a if you go obviously that position was never started as a 200x position, and if the guy got and if the entry was at $45, either he started that entry at $20 and he laddered it up until $45 and slowly increased leverage, or he had an entry at $45, which was like a 10x position, and then scaled it to max leverage, reducing the amount of margin in the trade, and then posted a very beautiful tile that instead of now having a 300%, now he's got a 10,000%, but this 10,000% is on $5 and the 300% was on $100. Still a great trade, but be wary of tiles.
And you only do this if you know, and you're an advanced trader like Chris does. You don't do this unless you know what you're doing, because to make a little mistake on a trade like that and have it on cross by mistake, because earlier on I saw somebody write, I went into a trade and I was on a 20x by mistake. We've all done those mistakes, but can you imagine if you mistakenly put in 100x and you're on cross? It could be very devastating. So you have to be very, very careful when you're doing what Chris is talking about.
Yeah, if you're when you're opening a position, I feel like a position shouldn't be opened with more than a 10x. And if you're gonna scale up the position, what you can do is then use leverage in order to scale the position while maintaining the same amount of margin. Let's say on this $100 account here, right? Or $99 now. You see what I do for the community. Let's say you take that trade and you're now using $50 in the trade, but now you want to take another trade when you want to use the other $50. Now you've got two trades running. 100% of your capital is getting used in the trade. Now, if that trade now starts to move and create higher highs and higher lows, right? And you want to be able to scale up the position, then that's when you use leverage to say, okay, cool, I'm going to I can keep my average net cost underneath the previous lower high. I can double my position by doubling the leverage. So then I take it from like a 5x leverage position, $50 position, to a 10x leverage position, $50 position, but it doubles the volume in the trade. So that's the purpose of leverage. Leverage is not there to make money. Leverage is there as a tool. The only thing that makes you money is the percentage gain on the volume in the trade, right? Yes. And managing risk, which is let's jump back to this. I'm so glad we got actually some extra time now, because I think we're gonna go in depth here, guys. We're gonna jump in depth with this. All right. So managing your risk. So now you're laddering into the position. Okay. So risk management is essentially, I'm getting my train of thought back, being the casino, not the gambler, right? And the only difference between a casino and a gambler is what, guys? What? Let me see if people are listening in the chat. What's the difference between a casino and the gambler, Terry? What are they saying there?
Okay. Nothing. They're laughing at you. Okay, well, that's chaos. Come on, guys. We're waiting for some responses. What is the difference?
Yeah, what's the difference between a gambler and a casino?
I think in a trading, the risk management is the number one.
100%.
When you do your risk management, that's it. Only what you need to start with is a risk management. That was my biggest mistakes ever.
Good to know that at least somebody here is listening. Thank you, Luba.
Yes, nobody else is listening. They're saying risk management, risk management, risk management. You see?
Okay,
no,
cool.
because you can do the different strategies. You can change everything, but if you don't do your risk management, it just doesn't work.
Yeah.
Yes.
Definitely. And then this comes into the next step, right? So the next step of developing a strategy that works for you is understanding where your pain threshold is on a position, right? So your position size. If you take a bet on the market, because essentially what we are is we teaching responsible gambling. We're teaching how to become the casino instead of the degenerate gambler. And if price moves into your red zone and it's painful, consider reducing your position size, because if there's pain, that means that you did not accept the risk before you took the trade, and you should be taking smaller trades. I'm not saying necessarily on that specific trade now you need to close a percentage of the position, but acknowledge that emotional state within yourself and realize that you maybe what you need to do is reduce the percentage of your overall capital in your account that you're actually risking on an individual trade, and compound. But prioritize the P&L at the end of the week, the P&L at the end of the month. Don't prioritize the amount of profit that you make on an individual trade, because you can make a lot of profit on one trade and then lose 5 trades after that and give all of that money back and more. And then when you look at your P&L at the end of the week, you're like, I did so well on Monday, and then, So
Chris, I've got the response.
Yeah.
Okay. One has money and the other does not. That is freedom. That is freedom, fellas. And he's dead on. One has money and the other. Exactly. Oh, my word. I have never to this day traded, I've gambled. I've never been into a casino to gamble. I've been to
I've got this chip that I keep, right? Can you see that?
Yes, yeah.
So this is my daily reminder. Okay, this is a 5 Rand chip for Sun City Casino. Okay, and I got this back in 2010 during the Soccer World Cup in South Africa. And I went there. I was looking after a group of Mexican families that were over for the World Cup, and they took me with them to watch a game in Rustenburg, in Mafeking side. Mexico was playing out there, and we went to the casino, and they gave me 2,000 Rand. So 2,000 Rand now, that's like $100, right? It's not it's a lot for some, but not for others. But I took that 2,000 Rand and I turned it into 10,000 Rand on the roulette and blackjack tables. And then I turned that 10,000 Rand into this 5 Rand chip.
5 Rand.
This 5 Rand chip. So this is a permanent reminder, and I've kept it like now for 13 years, and it sits on my desk when I trade every day now to remind me.
You didn't take out your initial buy-in, Chris.
I thought I was going to now turn that 10,000 into 100,000.
Okay.
So this is my reminder every day that when I trade, that I trade to be the casino, not the gambler.
Yes.
And I would much rather make small amounts consistently than make massive amounts irregularly.
Yeah.
You know.
Here's another one. The casino is the market maker.
Yeah, I guess.
So. Yeah. Yep.
Okay, next slide. Let's move. Let's push forward a bit here. Okay, so I've shown you guys this crypto win rate. If you're not using it already, it's a really amazing tool. It's free. CryptoWinRate.com changes the game really. And one note on that: if you guys are doing a new account, right? What I said earlier is compounding is really important in the initial stages of building an account. Like if you want to build a bit of capital on top of your initial in order to then be able to take larger risks. So if you're starting on a new account, you've got $1,000, you want to start trading 0.5% risk. So you're going to come here to this risk calculator. You're going to come here to this risk calculator and you're going to put 0.5 over here, right? And then you're going to calculate. Okay, you got your stop. You're going to put your stop loss. You're going to put the total balance. You're going to put your leverage and you're going to calculate. And this is the size trades that you're going to be taking with that level stop loss, right? But you'll find that trade will get you $10. The next trade will get you $15. The next trade will get you $20. And you slowly but surely you then build up, right? And get to a point where you've got 25% on top on your trading balance, and then this amount here becomes 1250, right? And then you see how and then because you've now also built $250 on your account, you go, okay, I've got there is a lot of confluence. There's a lot of reasons for this trade I've got a lot of my technical analysis is really lining up on this one. I'm going to take a little bit more risk. So you go, okay, cool, 1% risk. Okay. And you see how these things start to compound up, right? Now, instead of taking $250 positions, you're now taking $600 positions, right? Then you get your account to $2,000. You go, okay, cool. Look, maybe I just add another 0.25% on my risk. Okay. Now look at the size of your trades, right? Now you've just literally you've doubled your account, right? You're still trading only like 1.25% on your risk on capital, right? But you see how quickly the position size can compound. Instead of going in with that, this is what a lot of people do. They come in, they're like, okay, I'm gonna, let me jump in from day one. I'm gonna do this, okay? And then you lose $25. Now you lose another $25, and then you lose another one. Now all of a sudden you're doing the opposite, right? And then you're doing the opposite again. You lose another 500, a few trades, right? And all of a sudden, then you get down here, and you're like, okay, maybe I should reduce my risk. And now look what happens. See, now you're taking $300 trades, and you're 400 under. So rather adopt the opposite strategy. Take small amounts, compound, and then eventually, when you get to that little bit of gain, that's where you can start to ramp up on the leverage, ramp up on your position sizes and increase your risk a little bit.
And then there is another thing: when you compound, just don't be like you feel like you are a good trader, and then you rise your level to go in, and then you just lose everything.
100%.
It sounds like we have experience.
I think we all have experience.
I am so proud. I am same like you guys. I've been there. I am still there, and I'm still learning. And that's it, because I did so many times, let's say from $200 to $2,000, and then you're doing so well. You are compounding. You are getting in small. Like, everything is good, and then you see like, oh, I am perfect. I'm so good, and then you go big in, and that's it. You are smashed. You are liquidated. You are gone. and then you start again. But can you imagine what it's going to be with the big accounts? That means you need to start disciplining yourself from very beginning.
Yes.
100%. Yeah, this is very, very good addition there, Luba. Very good addition. I want to I think if you guys also, if you have other things you want to say, just jump in whenever, because otherwise I'll get on a roll. There's essentially three components to having a successful trading strategy. The one is, how do you get into trades? The next is, how do you get out of trades? And the third thing is, how do you take money out of the market? Right? So like the third thing is really simple. As long as you have a rule and you stick to it, you know, like if I go from $1,000 to $2,000, I need to take $500 out of the market. Now, what you do with that $500 is up to you. You can go buy Bitcoin. You can buy a new Gucci handbag for your wife. You can take the family for dinner. You can, do it, whatever you need to do. You come up with the rule. Whenever I get to a certain point, I'm going to take money out of the market, right? Because you can still compound from 1.5 to 3,000 and then take 1,000 out, and go from 2,000 to 4,000 and take 1,000 out, and go from 3,000 to 6,000, and take 2,000 out. Like, rather have that compounding effect, because then also if you do have like an emotional period of trading and you end up liquidating your account, you're not losing everything that you've gained, right? So when it comes to risk management, those are the three. The one that's a bit more complex is taking profits. So once you're in a trade, the first thing for me is, how do I de-risk my trade, right? How do I de-risk the trade, as in, how do I reduce risk? So reduce risk as in reduce risk to capital. So this was something that I learned from trading in the zone, and I started applying it into my strategy, and I found that it works really, really well for me. So rather look at it as in your own light, but and I want you guys to take what you feel is valuable from this strategy and apply it into yours. Okay, but essentially, I find that I'm really, especially if I'm taking trades where I'm on daily support and resistance zones, where there is a higher probability of confluence with the trend line, with support or resistance, with the stochastic, with my RSI in place, and I can build positions there. Generally, I can get a high probability of at least a bounce, right? But I mean, how many times do you guys say, okay, like let's say here on this trade, right? Now you get your entry, it comes up, right? Comes to that support, you've got as a resistance, as a support, and then does that, right? So now you got the trade right, okay? You got the trade right, it moves up. Now price can still come all the way back down and retest and actually bounce around and retest that 618 from up there, can still come and wick down to that. It can still play in this range for a while before taking a move to the upside. So for you to then, as soon as you get a move up to that level, it's not yet possible for you to tighten stop loss to entry, right? But I want to be able to de-risk from this as quickly as possible, okay? So if the price comes and wicks in, I get the entry, right? And then we come up. I want to be able to then, so I treat, for that reason, I then treat any position. Once the position is in, I'll treat it as 3 separate contracts. Okay, so essentially, if I've built a $1,000 position for a trade, that for me equates to three trades in one. Okay, I've got my initial contract. My initial contract is for me to de-risk from the position. Okay, so if my stop loss is 1%, right? That means my stop loss is $10. I'm looking for I'm looking for price to move double my adjusted stop loss. Okay, with my stop loss still has to be at an area where my trade is disqualified. I have to keep my stop loss in an area where my trade is always disqualified, right? If I move my stop loss to entry too early, price can hit my stop loss. Just because the price moved away from my entry doesn't mean that my entry is now disqualified the zone. Doesn't mean that price is not going to revisit that entry zone before the price action moves, right? So I take this into account, right? I've got 1% risk, 1% stop loss. Now that makes a $10 risk, okay? So my initial TP is going to be on 2%, where I take 1/3 of my position out, okay? That essentially gives me $6.66 profit, okay? So this is not my profit maker. This is my de-risk. This is the portion of the trade where I'm de-risking, okay? And we'll go into the math a bit later, a bit more at the end here. But essentially now my stop, if I now hit my stop loss, my actual realized risk in the trade is only 0.3%. Where originally I was willing to accept one, I was comfortable with 1%, right? Okay, my risk is now at 0.3%. I can sleep on that trade, right? I can hit my stop, it can come and wick me out. I've literally lost 0.3%. Like, we're good, we're fine, okay? Then the second contract in a trade, that's where I make my money, right? So the second third of the trade is essentially the profit maker, okay? So that's now that can be the balance of the trade. You can literally just have you're just taking 1/3 out to cover your stop loss, and if you need to keep it in play, and then the balance of the position you take it on TP2. That's cool. You can do that. Also, if you feel that the position is going to run, then that's where you manage the balance of your position. So you can then take, half and half at TP2, half at TP3, or let it run higher. But that TP3, that's what I call my gambler, right? That's where I've made my money in the trade, right? And I feel like, DOT could potentially pump a lot higher. So what I'm going to do is I'm going to leave a percentage in the trade to run, right? But I'm not if I was to leave my entire position to run and not take profits along the way, then the entire position is a gambler, right? So I'm risk off of the trade, right? And my volume is still at $670. The TP2 is essentially at the next resistance area. So that is the next probable area of reversal, okay? And then TP3 is only if you feel like it's ready to run, right? And you let that one ride. And also at the same time, this is then where you can where you look to then also you can build positions, right? So now imagine you've got I went through this in another one of in a few of my AMAs with you guys on Discord, and I think in one of the other 24 hours as well. So as soon as you start taking profits off of the table, you're also then reducing your average net cost in that position. So now let's say you had an entry at $1, okay? And then that $1 moves to $1.50. So you bought $100 at $1. Price moves to $1.50. You sell half of your position, okay? But you're selling half of your position for $75. So now you've still got 50% of your position, but it only costs, essentially your cost in that trade is now $25. So you're essentially reducing your cost per token significantly. It's like DCAing, but in trading, right? Now, because you've taken profit off of the table and you're sitting in the green on that third contract, you can then start to look to also build a position. So you can then you start getting these SR flips where resistance becomes support. You can see that price is consolidating in that area. You can see that we're breaking through out of a bullish wedge to the upside, and then you can look to then add to that position. But it's no longer it's just there as an extra source of income in a way, like what you make out of that trade. And then if it comes back to the TP2 zone, you can always close it out and still take the other half of the profit off of the table in that area, without letting it sort of break further to the downside. So Yeah, that's then taking us through to the three-part strategy for taking profits out. So what do you guys think of that so far? I want to know, like, are people liking this? Do you guys think this is something that brings value? Terry, what's the chat look like? Am I getting love or hate for this? You know,
actually, everybody's so busy listening to you that they're not commenting so much on the
really?
the chat.
Yeah, they're saying the solid teaching skills in play here. That's it.
A lot.
Yeah.
Yes, that's lots and lots of love. Loving it. There we go. You're getting lots of love.
Especially with these three taking profit strategies, the first step you need to fight is your greed. Again,
100%.
my school.
Yeah. Like this is the hardest part, right? It's it's that mental shift from prioritizing profit in the trade to prioritizing your P&L. You know, like and and understanding and also accepting that regardless, doesn't matter how good you are as a trader or a technical, at your TA, there is no certainty in the market. So if there is no, like, the amount of trades that I get that will take 2 ticks positive for me and then reverse on me, you know, like the amount of times that I'll take a trade and I'll get the perfect entry, but I won't get a high, but then I'll get a lower high and it'll come back and it'll stop me out. At least I know that on those occasions, my risk is significantly reduced, you know? So I'm prioritizing my P&L, you know?
Chris, will you post the slides somewhere for the guys?
100%. I'll put this onto Discord as soon as we're done here, onto the school server.
Fantastic. Thank you so much.
Okay. So just the last thing here, guys, for those of you who are in disbelief about the strategy, I put together the math. The math does not lie. Okay. So essentially, there is a 3-part and a 2-part. All right. I haven't gone into compounding and building positions with that the third contract. That's something you guys, I'm sure, can understand. But to keep it simple, right? So essentially, you've got a $1,000 trade. Okay, so your stop loss is for 0.5%, right? Now, I'm not looking at a percentage of capital here. We're just looking at the trade. Okay, then your risk is $5, right? So because your stop loss is 0.5, you would then be taking a third at 1. Now, generally, I like to ride larger stop losses, right? Especially with getting the entry. Until price starts moving, I might tighten the stop loss a bit. But when you're looking for that initial entry, you're looking for that wick down, you're coming into the buy zone, you know, they love to bounce price around in those areas to try and wick everybody out before they do the actual move. So I like to try and keep a larger stop loss for that, build the position, and then tighten the stop loss. And then that tightened stop loss, once price starts to make its move, that becomes my stop loss, right? Then you've got, so let's say your stop loss is 3%. Your initial TP is going to be at 6, right? That means that you've now reduced your risk in the trade from $30 to $10, right? Because you've taken $20 profit.
Zoom into your screen a little bit, they're asking.
Could I what?
Zoom into your screen, make it a bit bigger.
Let me do that.
Yeah, that's getting a bit better. Thank you.
Okay, that didn't work. Is that better for you guys? Can they see it now?
Is that better, guys? Answer in the comments, please. It is for me.
I think I lost my video while I was trying that.
Yes, you have.
It's really good.
All right. So essentially, then you've got your remaining risk. Okay, TP2, that's your money maker. Okay, and then TP3. So TP2, I've taken it 5 times, like 5x, right? So you're looking at your risk, and then you're looking at your risk, and you're taking a risk to reward of 5x on your second TP, right? And then on your third TP, I'm looking at 10x, right? So you're looking at a 1 to 10, right? So that essentially gives you an average risk to reward of 6 on the overall trade. And you can see then the profits and how they build, right? Same thing on taking it in two levels, right? Where literally all I'm doing is when price has moved 5%, when price moves double the stop loss, right? When I get a risk to reward of 2, okay? So RR is 2, I'm closing a third of the position. And when RR is 5, I'm closing the balance of the position. And then from that, you're then getting a overall risk to reward of 1 to 4. And we know as traders, we need to always have a minimum of a 1 to 3, right? So I'll show you guys now quickly how we look to map that on a trade when we're mapping out the trade before we take it. Just wanted to close off this presentation quickly with a little quote from Trading in the Zone. So while trading strategies matter, your psychological approach ultimately determines your success, right? So the whole purpose around the strategy is managing your emotional, your psychological state of mind when you're getting into the trade, when you're managing the trade, when you're getting out of the trade, right? So I've got a few examples here, okay? So
Fritz, before you give your examples, please, I'm sorry to say I have to jump off. It's been fantastic being with you for the last hour, and we will chat soon.
Are you jumping off?
I have to jump off, unfortunately. I've got another Zoom. Sorry about that. But
No
I'll leave
problem.
Luba with you, so you've got the two of you in good hands.
Yeah, I will take the chats, and maybe there will be some questions.
Thank you so much.
I think we've got another hour of an hour here together. So we're going to have to come up with some things to talk about. I think what we'll do is do some Q&A with the
amazing.
With the guys that are
we
talking.
Still have 247 people watching. I'm sure they have a lot of questions, and I'm sure they would love to ask them. Guys, don't be shy. Remember, no stupid questions, never. You need to be active. You need to ask. You need to educate yourself. And even if you feel inside that your question is like something stupid, or you don't want to ask, you just need to start. Otherwise, you're not going to do these first steps, because you need to sort out everything.
Yeah. Okay, guys. So here's an example, right? We have AVAX. AVAX was trading in this range for a really long time, all the way back. You can see May 2022, tested it as support, broke it, found the middle, resistance, support, broke it, support, came up, broke the support, resistance, came down, middle of the range. So AVAX was playing around here for a very long time and finally found the bottom of the range, okay? Now, after finding that bottom of the range, it pushes up. So this was a trade that everyone was talking about a few days ago. Now, you can see prices tried to break out. It's failed. It's came and it's found it as resistance, right? Resistance again with a higher low, and then we're breaking out, okay? Now, in a situation like this, what do we do? You've got a confirmed candle close above the resistance area, okay? Now, a lot of traders will then go, oh, okay, cool. I'm going to take this trade and I'm going to put my stop loss underneath this low over here, right? And I'm going to trade it up because we've got a confirmed candle close above the resistance. We've got a higher high, right? By following the laddering in strategy, instead of putting your position up there or putting your entire position over here, and then you want to put everyone wants to ride those tight stop losses. So then you've still got a 4% stop loss with a retest of that range, right? So now if you play it like that, okay, now how many other people in the chat would have played AVAX that way? You had the confirmation. You see a candle like that, you're thinking, okay, cool. Now we're going to push up further. You've got the RSI bouncing off the middle. Like, sure, we're going to push up higher. Okay. Now, instead of that, what we did is we put 5 laddered entries from 21 all the way down to 2027. Okay, stop loss underneath these lows. Yeah. So, and then we watch it play out. Okay. So now comes the emotions that come into the trade, because now we've entered our position. Okay. Now we're waiting for our entry to get hit. Okay. We're waiting. We're like, okay, oh shit. Now the price is going to move against us. Oh, you see, now it's creating a lower high. Oh, a higher low. Oh, you see, it's going to go up. See, over there, that wick over there, everyone starts thinking, this was the bottom. That was the bottom. See how the market makers start to mess with our heads. Okay. Now we've created a high. Now we've created a lower high, a higher low, right? Then we get that wick to the upside. Closes down, but wick to the upside. Okay. Now everyone start, like in an area like that, then people start FOMOing into the trade, stop loss underneath these areas here. Okay. And then what happens? You see, creates a higher high. Okay. So again, you still don't have any entry in this position. Okay. What happens? You start thinking, I missed the trade. I need to get into this trade right now. Otherwise it's because I know AVAX is going to pump. I need to get into it right now. Otherwise I'm going to miss out. And I can now treat this as my lower high, right? And this is what the market makers do. So you've got that high, and then they come for you. So they're building that liquidity. They're building it. And now you're in a position, and you're in a losing position. So your stop loss. Now you've got now for us. Where are we? We got our first entry. Cool. We're in 20% on that trade. All right. Now everyone thinks, okay, cool. We're going up again. Now that was the bottom. Now we've retested the range, so we're definitely going up. And then look at that. So you see how we as technical analysts would go, we're creating a higher high, we got a higher low, okay, cool. We on a higher time frame, we've retested the top of the range, so we take our position, right? Now instead of putting 100% of your position here, we take it and we ladder it towards the point where that trade is actually disqualified. Because if you were to put 100% of your position up here, you've got an 8.5% stop loss before that trade is disqualified. It's not possible, right? You can't take a leverage trade like that. Maybe spot, but you can't take a leverage trade like that. But by laddering it in, if for instance it had come, it retested the range perfectly, right? If that move had happened, cool. You're now trading with 20% of the position that you originally wanted to take the trade on, but you're also in profit. You're making money on this trade. You can find another trade and make money on that one as well, right? Or you put 100% here, and what's going to happen? You're going to want to put your stop loss underneath this area here, right? You're going to want to put your stop loss there underneath this low, and then they come for you. So you took a lot of people that took their entries here. That candle took everybody else out, but while it was taking them out, it was giving us our position in the trade. And then you can watch it go. So now, okay, cool. On the retest of this area, now we've got 2 candles. Okay, so in that on that box. Okay, now bear in mind, I've got my stop loss, right? Hold on. Okay, 5%, 10%. Okay, so my stop loss is 5%. My initial TP is 10, right? So my initial TP has now been taken on the trade, which means I've now got so now I've got 2/3 of the trade running. Okay, but this candle no longer scares me. So when you're thinking about it from an emotional perspective, now you're in the trade and you're watching it. What happens? How many times do you get into a trade, you see it move positively and you're in the direction that you guys want it to go, and then as soon as it turns over, you close it. You're like, okay, I need to get out of this. I was wrong. I need to get out of this, right? And then, but following the 3 TP rule, right? Essentially, my trade is now risk-free. Okay, I've got such a small amount of risk in this trade that I can still keep my stop loss in place. I can still keep these other 2 entries in this other entry, 1 entry down here. You see how the other 4 entries got hit? Okay, so I've actually got 80% in this position. I've taken 1/3 of that on my TP here. Okay, can keep that in play. I don't have to move my stop loss. I can go to sleep. If I wake up and I've lost a few dollars, that's cool, because 2/3 of that has already been covered by the initial TP, right? And I'm not worried yet. I'm not worried there either. You see? And then price moves. Okay. Second TP on that 100-day moving average hit beautifully, right? On point on the 100-day moving average. Okay. So then 2/3 of the position are out. You've made your money, and then you can leave it together. Then you've got your gambler, and your gambler is either going to come back down, and you're going to close it if we break the resistance, or this AVAX is going to pump up, right? Currently, we're teetering around that 100-day moving average, and I guess it's all on Ethereum now to decide what happens next. But the money's already been made on the trade, and then you've got that little bit. So you could take 100% of your you could close the balance of the trade here, and you've made 30% on $670. So that's that's good money on $1,000 trade. Let's have a look at another example here. Okay, so now we had this other trade here on Chile. Okay, so the higher time frames, we've been teetering underneath this area, and what we really want to see on Chile is to break back into this range. So we're looking at this now with the bullish nature of the market, that we're going to hopefully break back into this range here. You can see that price action is forming a bullish wedge. We're also holding the 50 EMA on the daily. Okay, we're also holding the 618 on this massive wave to the top. Right, so we've got a lot of conviction or confluence towards the trade. So we come back down to a shorter time frame, and let's see how it plays out. So now, essentially, we've now building a position. Now, what we really want to see is a break here, a retest of it, and a move to the upside. Okay, so you take your trade. Now, this is Wednesday, the 29th of November. Okay, now imagine you've got entries spaced, right, from where you've expected it to break down to where your trade, to just above where your stop loss would be. Okay, now I'm gonna adjust this so that you guys can then understand where break even would be, as in dollar cost average. So essentially, if all of your positions get hit, you're now taking a 2% risk on this trade. Okay, let's see how it plays out. Okay, so you're hitting increasing orders. So you get about 60% of your trade in. Okay, then what happens? You get that, right? Break to the upside. That candle there, you're now risk-free in the trade. Okay, because you've taken you've made sure that your risk, right? That your initial TP is in line with the most immediate resistance area. So that's the next component of it. Like, can I have price action move to its immediate next resistance zone, and for that to be at least double my stop loss, right? Before any sort of expected reversal takes place. Okay. So then you're out of the trade, or like you're now risk-free in the trade. And then you can watch it play, and you can see it coming, and you can see those candles pushing down, and you don't have to worry about it, because all of those candles pushing down, that's also the market maker trying to tell you, the price is coming down now. If you want to keep your profits, you should close your trade now. You know, if you come down to these sort of lower time frames, you know, that little push down, that little push down, this little push down, like this is where they're trying to tell you, no, close your position. That was the pump. That was the pump. That was the pump. You should close your position now. But because you're now risk free, there's no point in closing it. Like you've got a really beautiful trade. You can't bring your stop loss to entry though until you've now essentially broken up and created a new low and a new high. So how do you de-risk from the position without bringing your stop loss to entry? You know, if Bitcoin dumps over while you're sleeping and this thing comes straight down, you want to know that, you know, your technique, regardless of how good your technical analysis was in the situation, you know, you're safe, right? Like that. Look at that. Did you see that? So now what happens if you moving your stop loss up? Moving your stop loss because you've got a new high. Those candles come down to take you out, right? So it's messing with the motions. Look at that. This is you know, what is this telling you? What is this telling you at the moment? This is while these candles are playing out, while it's rejecting off of the 618, you're like, look, the 618, it's had its healthy push. It's at the 618. Now look at it, it's dumping down. Okay, cool. I'm gonna get out on the double top, right? Because when you're in the trade, sometimes what you end up doing is you end up actually looking too closely at the trade, right? And you start looking at individual candles as if that's technical analysis. You know, at least that's something that I used to do a lot. You know, like you look at the one candle and you're like, oh, okay, this is I'm screwed here. And then what happened? Your second TP was hit. Okay, your second TP, the next resistance area, the top of the range. Okay, so now you've de-risked, you've made your money, right? And then you can let the rest ride. Now your gambler sometimes can do really cool things, you know. But in this trade, we've made our money, and we've now got that third entry, which we then can look at with Chile to potentially, if we consolidate in this area, to go, okay, cool. Now I can start actually adding to that position. My dollar cost average in the position is still down here at 73. I've taken the main profit on that position. And now with that remaining position, I can then look to, if I was to double that position again, right?
Yeah, there is another question in, someone is asking.
Yeah.
When you are already in successful trade, if it's worth to continue building up bigger position. That's exactly what you are saying now, yeah?
Yeah, so if I was to pull in here quickly back to this sheet over here, right? So now let's say you've got that third contract. Okay, so now your third contract is essentially risk off entirely. Okay, there's no, you've got your stop loss in profit. Okay, and let's put that, let's say you've got now a $333 position, right? So now on that balance of that position, essentially that comes into play as now you could then treat it in a trade like this with Chile is when you've now still got your average net cost down here at 7,285, right? So if, for instance, you start seeing price breaking up towards the upside, now, and you wanted to potentially try and make more money off of it, you're in a risk-free position to do so, because even if you were to wait for price action to close, right, bullish, you've got the 4-hour turning to the upside, right? So you look for the next candle to see are we trending to the upside. You could then double that from a $330 position to a $670 position and still have stop loss at entry at 0.81, right? So then you've now built you've made your money from the trade. You've got your profit maker out. Now you can then look at it as now a brand new trade, except now you're building a position that is entirely risk off. And the best thing for a trader is to have a risk off position. You can literally take that and build it now into a $10,000 position, $5,000 position in a bull market, but it's now a completely new trade where you would then also treat it as a new trade. So you're then looking at, you'd be looking at price action here. You're saying, okay, cool. There is potential for that we're breaking up, right? But you want to start then seeing, are we breaking the resistance area here? And if we're breaking that resistance area, which we're currently fighting at the moment, right? Then where's the next one? Okay, so potentially you've got another play to the 0.97 area, 0.94 area, right? If we can break through this resistance area. So then you look at that, but now you've got no risk. You can double the position and bring your stop loss up to entry, and it's your gambler. So you treat your gambler now as a new position. If price starts to kind of do that, and you see that we then trade back into the range, then you close the position and your stop loss, your entry is at that area here, and your stop loss is at entry. And as long as if price then closes and back within the range, you then, instead of taking, you still make 5% on the third contract. If you want to play it that way, that's completely up to you. It's your gambler position. You can play with it. You can close it here and treat this as a double top, and take 21% on that, which will give you another sort of an extra $10 on that $300 position. Or you can double it to a $600 position and then trade it from that area, which would be your new average cost in the entry, and potentially make $17, closing it at 0.95. So you've then got, you're now playing a completely different trading game, because you're in a win-win situation. Either I make 5% on this trade, or I make 17% on this trade. Where on every other trade that you take, when you initially take the trade, it's either I lose 5% on this trade or I make 15% on this trade. But you've got some flexibility here. What do you think, Luva, on what I'm saying? You're muted there, I think.
Yes, I'm reading now the comments, and basically the guys are asking maybe we can take one trade together, like from scratch, like with planning, risk management, buying and selling. And some people are asking how to exit half of your trade. Like maybe we can find some small trade and explain them from the scratch how to do it. And
sure. Let's do that with this DYDX one that I've got that I'm still in from yesterday. So if we first things first, we zoom out, right? So you first want to look at a trade and see what is it doing on the macro side. If in doubt, zoom out. Okay. So that orange line there, that's I'll show you here on the moving averages. So that's my 100-day moving average. Okay. And then the EMAs, the red is my 50 EMA, the blue is my 200 EMA. So you can see how price has been treating this little green box as resistance there again. Okay. And we broke through and came back up to the top of this range and failed it. So my thesis was that we will come back into retesting that area. When you get a SR flip, resistance becomes support. So we're looking then for that reversal. If we were to also put fibs, you can see that you're coming back into that box as well. So how we set up the trade is essentially we start off by identifying the area within which that we expect price to have a reaction. Okay. And then you're going to see ladder your positions, right? So if we come back to Bybit, so we're going to use Bybit because it makes things a bit more, let's see here. Here we go. Okay. So let's go to DYDX. So essentially, initially we have identified the area. Hold on. This one. So we've identified the green box as an area within which we'd like to see reversal, right? We've got the trend line coming up here. We've had resistance. This is a resistance area in the past. We've got our trend. I would expect that we hold that trend, and I don't want to see price below the 100-day moving average over here. So now if you wanted to take that trade and put it in up there and expect that's support here.
Sorry, Chris, to disturb you. Some people asking, maybe you can take this. Maybe you can do the screen bigger and take away the coins from your right.
Yeah, sure.
And they can. Yeah, perfect. Thank you very much. Amazing.
And let me do that as well. Is that better?
Yeah, that's great.
Okay, cool. So now we've got the trade set up potentially. Okay. Now sorry, I need to reverse. So here was the trade setup. Okay. You have price moving down. You've got a general support area that's been held twice. It's holding in the green box. You've got the bottom of the box holding as resistance. If you look back over time, resistance. We fought in the box. We fought in the box again. It was resistance twice over here. So there's a probability of some kind of price action happening here. Also, I don't want to see price come below the 100, the moving average, right? Also, don't want to see price breaking the 786. Generally, if you break the 786, then you're going to come down a lot lower. And the next area is, the 886, which is all the way down there. I don't think that would hold. So then we would be coming all the way back down to that range. Okay. So we don't want to see that area breaking. So in order to then take the trade, we're going to say, okay, cool. Initial entry is at 2.89. Final entry will be at 2.64. So on DYDX, then you come in here, You go, okay, cool. What did I say? 8.9 and 6.5. 2.65 and 2.89. Am I right? Yeah, 8.9 and 6.5. Cool. Now, that gives you an average net cost that you can see over here at 2.77. So with that, we're then able to adjust the stop loss to 2.77. Okay. So stop loss is going to be 6%. Okay. So if, for instance, all 5 of those entries get hit, then my average net cost in the entry, my DCA entry will be at 2.77. My stop loss is going to be underneath that MA at 2.6. Okay. So we can come back here and we can say, I've got a 6% stop loss, right? My risk, my account is $1,000. My total risk on the trade, okay, is 1%. Let's make it a bit easier. Cool, 1.5% risk on the trade. So that means that I can open essentially a $250 position on the trade. Now, some of you guys might be thinking, oh, like that's not really a big trade. It's actually such a small trade. But are we prioritizing our P&L or are we prioritizing the entries? Remember that third entry can also go much higher, and you're compounding that entry in profits all the way up, right? So you're making immediate money and you're planning for future money in the trade. So then you would come to Bybit, right? You say, okay, cool. I can open up a $250 position, right? So let's say that means that I can buy 90. So $25, 10x leverage would give a $25 position essentially, okay? And then when you come into the trade now, see that you're going to have 5 entries. Each one is going to be marking down. Now, where is your stop loss? Your stop loss is at 2.6. So then you need to come in here onto the entries and add that stop loss. Okay. So you got 2.6. And then you're going to come in here again, 2.6. You're going to put it on every single one of these entries. Okay. And the next part of that trade, right, is you want to see where is price. If once I've got my entry, where is price going to go next, right? Until price actually breaks out of this trend and moves up, can't really change your stop loss from this area. But if price comes down here, I want to be risk off, by the time it gets back up. So with that stop loss, where can I be risk off in the trade? I can be risk off in the trade before it even gets to a potential reversal area. Okay, so then let's play it out. So you get your first entry. Okay, you get your second, you get your third, comes up, you get that wick. That wick gets you out of it takes risk off in the trade, right? And now we're playing around on the 618. So like this is live action now, right? Price could actually come back down and retest this area again. Okay, as long as I'm holding above this 100-day moving average, for me, the price action is fair, right? So this is still a valid trade to take. Even now, you could put these entries in and see if price comes back down to retest this area. Those other 2 positions are still in play, but what I've done is I'm already at I already made it to this area. You see that one wick there? So this trade is already risk off. Okay. If we get a retest back down here and we take and I get those other 2 entries, then that trade becomes a bit more risk on again, right? But probably there is essentially we've already reduced risk, and this is a trade that you guys can take potentially now. I think that if you with looking at the RSI, probability is that the DYDX can come down while the 1 hour resets and consolidate in this green zone over here, and then have a push to the upside, right? And if it does come back down, then I would be looking again for a wick back up to the 3.1 area. So what you would end up doing is once the entries start getting filled, so let's say this comes down, wicks in, gets those entries, comes back up, right? Then you're going to put that initial TP back up at this area so that you can be risk off, because you don't want price bouncing around here and messing with your emotions for too long. You want to get your entries and then de-risk the position and then let the other 2/3 ride. The next for this DYDX trade, I'm looking essentially then for a break and a push to the 25% area, right? That's the next primary resistance. If we can break the resistance area that we're in, if this can be turned into support above the 618, then taking more profit at that area is a great idea, and then taking more profit again at the top of the range at 3.8. So your third TP on this could be 40%, right? So there's nothing to worry about taking 12% on a third of the position, because then you're getting 27% on the next third, and you're getting 40% on the next on the final TP. If we just take that to our calculator here, where we've got we've got a 5% stop loss, so the 10% takes out about $9. Let's see if I can adjust this. So that would then be 25%, so you get another $22.50, and then on this one, you get roughly 50% on the third TP, so you're making $76 on that trade. Or you can take that third TP, that third contract, and wait to see if we then break this range that we've been sitting in for quite some time. Break that resistance area and turn it into support, and then you've got a $330 trade that you essentially started down here, and you could bring it up and have an entry at 3.36. You could have a $700 trade up there. That's essentially with the entry level at 3.38. Okay, so I think I'm ready for some questions. Actually, I think we've got about 20 minutes left. Luba, is there any questions in the chat or other charts or anything that guys want me to have a look at? Or
yes, someone asked you, can you show how to take half of your profit, how to close half of your trade? Okay,
cool, no problem. Let me do that. So once you've got an entry, so let's do that here. I'm gonna say just open an entry over here. Okay, let's make it a market order so that it comes in. Okay, so now you've got an entry. So essentially this is a $70 position. My margin in the trade is $7. The cross is 10. Right now, if you want to close a percentage of the order, you've got over here close by, you've got either limit or market. So market, this is where the trading fees, primary difference on it is trading fees. So like you've got you've got your maker and you've got your taker rates, right? So that's kind of where what you see over here, your funding rates. Okay, so you can go and have a look at your maker and your taker rates. If you do a market order, now you come over here. Okay, so essentially the position is now $24, right? So if price was to move to my initial TP, I want 1/3 of 24, right? So that's what, 8. So then 8 units is essentially 1/3 or the first contract in this position. Okay, and you can set that by coming to the TP here. So you can either do it manually by going close by, or you can come to the TP stop loss over here. So you add your stop loss is going to be set over here. Okay, and then instead of going and closing your entire position, right? So if you click here and you go, okay, cool, I want to close my entire position at this point, then okay, there's your profit, right? But you can come to this part over here where it says partial position, and then over there you can say, okay, cool, I want to.
I'm sorry, Chris. People can't see. They are asking to move the pictures.
Oh, can they not see my screen?
Yes, now it's going to be better.
I changed it. You can go on.
Okay, perfect.
Oh, you changed it. What? Oh, so you couldn't see my Bybit screen before?
They could, but I had enlarged your screen share.
Okay. All right, perfect. All right, should I start again then? All right, quickly. So,
sorry.
No worries. So I opened this quick little DYDX position here so I can show you guys. So you've got, you can either close percentages of your entry by coming here to the end where it says close by, and then you can set a specific price, like set specific orders, right? And say, okay, cool, I want to close 8 when this gets to like 3.2. Okay, and then it will put a sell order at 3.2 for 8, which is essentially the initial 1/3 of the position, right? Alternatively, what you can do is you come over here where it says TPSL, and you would then this is to close your entire position. They've got a new section here where it says partial position, and you would say, okay, cool, 1/3 of 24 is 8, so I want to close 8, and I want to close that at 3.2, right? You can also set partial stop losses as well. So like if price breaks a certain level, I want to close 50% of my position in order to manage your risk. You can also do that. And then you can see that those then, as you set those entries, right? Now you can add another one. You can say, cool, now I want to close another 8 of the position when I get to let's say I want, the next resistance area. So then you set that one up, and then your final TP, you could say, okay, cool, just close everything else. Or you can come here and say the whole position. If we get a massive wick up, I want the whole position to be closed at 350, right? And then if you zoom out here, you'll see that I've got TP1, which is my initial contract, essentially into that immediate resistance. Okay, so if price hits that, then that would take the first take profit. TP2 into that resistance. I swear to God, guys, I didn't plan this to be on the resistance areas. It's purely by chance. And then your final TP at the top of the range over there. So yeah, that then helps you then to set your TPs. Obviously, you can also then do the same with partial stop losses. So like if, for instance, you want to keep your stop down here, but if price actually breaks below there, you don't want to be risking the entire position down there. You just want to risk half of it or 25% of it. You can always put a, you could always say, okay, well, if price drops below 2.97, I want to close. There we go. See, so then, and then it would close out your position, and it also tells you exactly how much money you're risking. It tells you how much you're making on that trade. It tells you what percentage you'll make on that when you close that percentage of your trade, and so on and so forth. And you can see now you've managed your risk. So there we go. I'm going to close this now. There we go. Okay, I think what other questions we got there, Liva?
Yeah, another ones are some are asking about your previous strategy, if it works for the short term and the scalp trading as well.
The short-term scalps.
Yeah, before you just explained about your DYDX trade, if it works for the short term and scalp trading.
Yeah, it does. It does work for the short term, but I would still play short term off of higher time frame support and resistance areas. I think when you're playing short term, just make sure that price action isn't just in the middle of nowhere. That you're playing it into a major higher time frame trend or something like that. At least, you don't want to play a 15-minute chart and then it's actually coming into a daily resistance.
Yeah. And then is another one. Once sitting on a spot buy, can I still add afterwards a leverage like X2 days later?
When on a spot, I don't think. No, you can't. You can't on a spot unless you're opening a margin order. But what you can do is you can come over here to, you can take a trade, and then what you do is you take it as you can bring leverage all the way, come down to 1%, or what 1x, and then if you want to then build it up, then you can go to 2x. So if you want to build the leverage on a spot position, rather take it as a 1x leverage position, and then it's the same as taking a spot position, and then you just then can build up your margin. Any other questions?
Do you know anything about the 100-day change? How do you get on the 100-day change?
The 100-day?
Yeah, how do you get on the 100-day change? I really don't know what this person means.
Yeah, I'm not sure.
Yeah,
maybe if they can just rephrase.
Yeah, maybe. Yeah. Please, can you rephrase your question? Someone is saying Bitcoin hits 44 just now again. Okay.
Yeah, I can see it. I've got the Bitcoin on here, and I've mapped out an area of 42,800 to hold, which is the 50. Otherwise, we need to kind of. I'm looking at us break. Either we break or we retest at 44. But yeah, it's looking quite bullish. We've had a 50% retracement, and this is why I was looking at stacks earlier. So like you can see that on this wave, we've got the price action had a healthy pullback into the 50 area. So it's a healthy wave. We can push up from here. Let's see what's happening with the stacks. See? There we go. Stacks is starting to move as well.
He rephrased the question is, how do I put the 100-day line on my trade chart?
The moving averages. Okay. If it's an indicator. So if you can say, if you come to indicator here, then you look for MA cross. So if you just type MA cross over there, right? Then you add it to your chart. And then if you come to settings, then you can change it. So you can, I look either at the 100 and 200, or the other one to look at is the 50, which is also a useful one. And then, yeah, that's where so you're going to, and then you can look, I look at the 100-day because that's something that's it's used more in the stock markets, the 100-day. But I find it's been working quite well for me on for like the cross. You can see, for instance, over here, we had the cross of the 100 and 200, right? And then the pump. And then we had the retest of the 200.
Wait, we still have 247.
Sorry, Luba? Hello. I think Luba's just been disconnected. Let me jump on the chat. All right, guys. So we got about another 10 minutes of this session before the next host comes and takes over. So, what are you guys thinking? What are you guys looking at? Give me some charts. What do you want me to see? What would you like another opinion on? Okay, cool. So, yeah, looks like Luba froze. Okay, what questions we got in the chat? Let's have a look here. Come on, guys. Questions. What do you guys want to see? We've got 10 minutes. Check mover. Yeah, let's have a look at mover. Not something I generally chart, so let's see. Let's have a look at this.
Oh, sorry, Chris. My internet today is so bad. I just don't know. Never been like that before.
No problem, man. No stress. We're just looking at. So this thing is all the way down. Okay. So you can see how we're getting the cross on the EMAs. Let's start mapping out some levels here. So we've got that level there. We had the deviation. Got another resistance area up here. You can see it was support, resistance. So if we bring our range in, you can see that we're breaking into the top of the range. Let's see if we can find a trend line here. Yeah, there we go. So we've got a trend retest. So we've created a higher high. We've got a trend mid-range retest on the daily. So now we can come down to the 4 hour. Let's turn that off. It's irrelevant here. Okay, we're holding the 50 EMA. We are getting some sell pressure from the upside. If we were to you've got, I would like to see the 4-hour kind of, yeah, you see, I'd like to see the stochastic kind of reset here a bit. But you can see also how it's holding it's respecting the 200 EMA. And again, the 200 EMA on the 1 hour becomes the 50 on the 4 hour. So you can see how it is respecting that. The screen line, yeah. So yeah, it's been respecting it, lost it, found it again, lost it, found it again. Same thing with the blue. So potential play here, I would also want to make sure that we're not breaking below breaking the trend or breaking the resistance area, but you could potentially then play that, and you would have a gamble. I'd play it for another retest of the trend here, right? So try and get if you wanted a 5% position, you could start one here, but then I would ladder in from there down to that wick on the 2.88, right? For potential flush out. Be careful of this EMA coming up here and creeping up, because we've kind of left it behind. And if you get stopped out, then we would, let's take the fib. Could potentially play it again here on this area, which has also been treated as resistance in the past. So yeah, you've got a you've got a support area here onto the fib. So there's two potential plays here. Either if we kind of get some downside pressure, then you want to see us come down into that support and reclaim the 200 EMA on the 4 hour. And then you would be trading it back up. If, for instance, you wanted a position now, I would be taking a very small position, because you could still get downside if there is any kind of rejection here on ETH or on Bitcoin and some bouncing around. You're not getting any sort of break of structure yet. So the next thing that you want to be looking at is, you can see here you've got, a lower high, lower low, lower high. So at the moment you're in that sort of limbo state to be opening a full position here. Rather kind of, you want to see this taper down, find itself a home above the 50 level, and then you want sort of a position down there, and then ladder into it to allow for some flexibility to the downside, a little bit of a wick to come and grab this liquidity. The liquidity I'm worried about is in this area here. So you kind of want to keep your wicks underneath that. Your stop loss needs to remain underneath that, because if you get a push down, then they'll come for that. They'll come for this. So you want to make sure that you stay. You're keeping your stop loss under there. All right. Did that help? Who was asking for mover? Okay. Let's do another one. AGLD. What is this? I wouldn't trade this. This thing is there's no volume here, guys. Unless I'm looking at the wrong chart. Could you tell me what chart on the AGLD you'd like me to look at, FJ?
I am back. TAR, TAR. Have you looked at TAR?
TAR. Let's have a look. No, you guys are proper degen. I didn't realize how degen you guys are. TAR.
No. Just a second. TIA. Sorry. TIA. I lost for a minute. Yeah.
You guys are so degen. I'm impressed. Okay, cool. You can bring up. So we've got Beth and George coming on now. We're good. You guys are here. Okay.
Hello.
Hi.
What's up? What's up?
Great job, guys. I have to wear the lucky Bitcoin hat because gotta do it.
So for the person who was asking about Tau,
Yes,
this thing looks as dead. Thai, this thing looks as dead as they come. I wouldn't touch this. I wouldn't touch this with a spot bag. Never mind a leverage bag. Yeah, you've got absolutely zero volume. This thing has
no, TI. It's a Celestia coin, the new one, the Celestia one.
So which one?
TIA.
TIA.
Yeah.
Okay. Okay.
The Celestia one. It's not so bad in this community.
Yeah, like I was looking at this TAI thing, and
no, it's not so bad. It's not so
getting
bad.
worried. This one. Okay. It's a new project. So like when it comes to these new tokens, the best way to trade them is wave by wave, right? So you've got a support area there. Then you've got another support area. So because there's not really much in the way of history, you kind of just following higher highs, higher lows, right? So take your fib top to the bottom to top, right? And try and identify a zone. Like for me, I would probably look at it in the screen box over here around the 7.3 area, right? At the moment, it's in price discovery, so it becomes quite difficult to trade. This can kind of, I would be looking at it as something like if it can kind of do like that, and then if you see that it starts to balance there, like finding support above there and creates a change in market structure, as in it's gone from creating these lower highs and lower lows into creating higher highs and higher lows, then look for an entry and treat the low as your stop loss. But otherwise, a higher conviction area would be if this thing kind of bleeds down and finds support again on this area here. Like I'll give you an example of another one which is in that area now. Also a new token, Zephyr. Yeah, you see. So this thing came down, hit my alert last night, but you see how it literally it likes these SR flips. So it broke up, came back, broke up, tested it, came back, tested that high, came back, tested the 618 area. Like it respects the waves. So on the newer tokens, you kind of just, all you can do is follow those waves, and until this thing kind of comes back to trend, I wouldn't touch it. Yeah, there you go. You got your trend, you got your 50 on the fib, you've got an SR flip, so retesting it as was resistance, broke it, now support. So there's your area for TIA. Okay, I'm gonna stop sharing and let you guys take over because I feel like I've taken too much of your time already, man.
Oh no, it's okay. We're only going to talk about how to keep everybody secure.
Oh, that's a brilliant topic. That is really an amazing.
Yes, we're very excited. I know that I think we're going to pull up our slides. I think George is going to go ahead and have them pulled up for us.
Okay. Well, I'll get into the background. Are you well, George? Can you hear us?
Yes, I can.
Okay.
I know. I have like 8 earbuds. I've got like all my earbuds charged because they die.
So what are you guys covering? Are you going into scams or?
Yeah, scams, pretty much how to protect yourself, just a lot of things. I mean, so much fraud out there. You know, literally somebody pretended to be Sheldon, and we'll go over that in here. And you know, I got pictures. You know, Sheldon's not going to reach out to you guys. He's never going to DM you. He's never going to ask you for money. So just things like that, just to make sure, you know, how you do VPNs, all that great stuff. Yeah. See, I have my Sniper Club shirt on. Yay.
Hey,
the
nice.
best. Yes, yes.
Very nice. Very nice. Yeah, you're looking good there, Beth. I'm gonna get off the stage now and leave you guys and be in the background. Love to everyone who stuck it out with me. Thank you so much for being here, and I hope I was able to teach something that added value. So yeah, see you guys on Discord.
For sure. All right. Hello, everyone. Welcome. Hello, as Sheldon likes to say. Welcome to this portion of the marathon. We're so happy to be here. We have Beth, and Beth, we're moderators for Crypto School. The easiest way to learn crypto online, definitely. So both of us have taken. You've taken Crypto Sniper School and Will, right? Yeah,
I
so
have. And someone is knocking on my door. I'm not going to answer it. Sorry. Yes, I have. And I highly recommend you do both. But please, you guys, if you haven't taken either, take Sniper School first. You really need to take Sniper School first, please. Yeah.
Yeah. They're both so beneficial, and I got so much key core understanding of trading from Sniper School because I didn't understand what support resistance was. All the stuff that Chris was just talking about, and even in the episode earlier about laddering into a trade, I didn't know anything about that, or how to portfolio, break up my portfolio and different indicators, et cetera, et cetera. It was all, just buy. It's going up. So
yeah, just buy. It's green. It's at the top. Let me buy it. No.
Exactly. Why is it going down? You're not even at work and it's already going down.
Yes.
So as Beth indicated earlier, what we're going to be talking about is a very important topic, especially if you're focused on making gains in the crypto market, because your security is of utmost important. And I'm so grateful to be here with Beth today, because Beth has been hacked multiple times. So she has real world experience as to what not to do. And you know that we're talking about it from a perspective of common sense and trying to keep you safe. So, the full topic of today is crypto security. So let me just get started with talking about some quick facts about crypto security. So cyber criminals, a lot of people, and this is what gets me, is most people say, I don't have enough money for anybody to be interested in stealing my money. It doesn't matter. If you're on the other side of the planet, I don't know how much money you have, right? It's all a facade online. You get to decide who you're going to be, and different people will present themselves as different things. But there are lots of regions of the world where people are very interested in having any portion of your cash, and cyber criminals are everywhere. They can be your neighbor.
Everywhere.
Yep. They can be your neighbor and to somebody living in a foreign country. So human error accounts for 95% of cyber attacks. So it's really something that we do a week in our armor that creates the opportunity for cyber criminals to get in and attack us. And there are billions and billions of malware and scams out there already. So you really need to be on guard. This isn't new, right, Beth?
No, it's not new. The first time it happened to me was in 2021, the very beginning. We'll talk about it later. But I'm still here.
Mm-hmm.
But I learned my lesson. Jesus.
Exactly. So data breaches happen all the time. you have to expect your data to be out there. That is just the core, right? If you share something online, expect for it to be replicated and, you know, shared again. So all of your credentials for different accounts, you need to be using different passwords for those, because if I get your password for one account, if I'm a hacker, I can do a brute force trying to use that same password for all the different common sites. And again, human error accounts for 95% of data breaches. And the goal is to get to the honeypot, what I like to call the honeypot, or your critical asset, your Bitcoin, or your credentials, your personal identifiable credentials, so that I can create accounts on your behalf, or to drain your bank account, right? Anything that I can do to make profit off of it. 9 times out of 10, they aren't trying to get in so that they can take pictures of you. It is to get your money. So having a multi-layered security approach is critical, because, you know, malware is one piece of it. Using a VPN is another piece of it. You know, having physical storage for all of your paper records, or anything that you don't want in front of in front of people who could access it and potentially use it. Again, your neighbor, oh, I think that is a wallet address, let me try it. You know, given the opportunity to steal, people will steal if they believe that they won't be found out. That is a fact in the security area. So just being mindful of human nature helps us a lot. Another thing is, you know, being mindful about what information you share when you're out talking to people. I like to say, don't talk about your bags, or use hypothetical numbers. And, you know, make sure that you're using good applications, you know, jailbroken tools, create breaks in the fabric, right? Like there's a security layer, and if you're using a jailbroken, you know, mobile device or software, there's an opportunity for malware to be in there. And then really taking the data that you have seriously. So you need to be thinking on all different layers, and this isn't just something that you do once. It's an iterative approach to maintain the best quality security system for you. And, you know, Beth, how that's really shown up for you and me in this past year is getting the new Tangam wallet, which I got. I followed you. I got a new one. Woo!
Yes,
right?
yes. And for those that don't know what that is, there's a difference between hot storage and cold storage, right? So anytime you're putting your money on an exchange, it is vulnerable. Now that's how we do futures, right? That's how sometimes we do our spot there. But we highly recommend, at least I do, and many of the mods here, and even the OGs, do not leave a lot of money on your exchanges. Later, I have a presentation where I'm going to show you guys how to move it. Very simple, but it's not, because if you move, for example, Bitcoin to, you know, a different token, you're going to lose it. You can't get it back. But please, 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 please go get yourself a ledger, a Trezor, a Tangent wallet. And if you're keeping your long-term hold cryptocurrency, keep it on that.
I have a
You have them
PayPal
on.
too.
I know. Yes.
I am.
I
you know, phones. I have phones.
Yeah, I know. Let's see. 1, 2, 3, 4 phones. Yep.
Well, phones and computers and wallets are all part of my security system. So because I want to keep private data private, and hackers will try anything. It's very important. You need a multi-layered approach. So let's move on. Enough of the lecture. All right. So secure your device's information, virus protection, passwords, two-factor authentication, hardware wallets. We were already talking about those in VPN. Passwords and two-factor authentication, we're not really going to go into today, but, you know, turning on 2FA and also using a password manager so you can have a unique password for every site that you visit is very valuable. Some major security tips, I'm going to zip through these really quickly because I want to get to the meat of the discussion, which is where we're going to talk about crypto scams. And that's where we want to spend most of the time, but we want you to be armed, and we'll revisit this at the end. So the number one thing when it comes to security, and this sounds so simple, but the number one thing is think before you click. Okay. I used to work in a secure environment, and they used to send out phishing emails just to test people's ability to not click things they shouldn't, right? So, and if you had 2 or more phishing attacks and you failed them, then you actually got reprimanded for that. So it's so important, because you create one break in the security and it can result in billions of dollars being stolen. The largest bank heist in the world, it was like 200 billion or 20 billion dollars, Bangladesh bank, and they figured it all out, and somebody enabled them access, and it was somebody who just clicked something. So use strong passwords, use a password manager, avoid using debit cards online. Debit cards are not in the United States insured the same way that a credit card is. So when you use your debit card, they can get the money out of your bank account, and it is a transaction. There is no, let's work together to figure it out, and fraud that exists on the credit card side. So use a credit card or a prepaid card instead. Be cautious on social media is another critical item on this list, because so many scams are coming out on social media. 90% of the population is there in some form or fashion. So if they can just get you to click a link on social media to follow them down a rabbit trail, they've already got you partially into their trap. Make data backups. Oh, as I read that right now, I think about losing my computer earlier this year. I'm really, really grateful that I had backups of my data, because if I didn't have backups of my data, I would have lost a lot of core information and potentially access to different systems. And last but not least, this is the last one I'm going to really focus on: use a VPN. In crypto, there are so many reasons to use a VPN. I was visiting friends in another country earlier last month, and their country is under restrictions, so my VPN enabled me to show up as being at home, which was awesome. And yeah, I said I'd stop there. That was enough peas and carrots for you. You can go on to the dessert. All right. So Beth, why don't you pick up
my
here?
God. Yes. And if you can handle the slides, that'd be great. So this is a saying that I learned very, very hard way. Not your keys, not your crypto, not your Bitcoin. So what that means, like going back to the whole wallet situation, right? You and I and the world, we're all making these trades. We want to, we have spot, which you guys know, you're actually buying the actual token. You're buying that Bitcoin, right? And then you're future trading. Well, name one place that you can future trade that's not an exchange, and I'm there, because it doesn't exist right now. And you invent that, you become a billionaire. So basically what that means, again, when you get a cold wallet, like like we mentioned, like a Tangem or a Ledger or a Thesis, there's many, you're going to get what's called a seed phrase. This seed phrase, do not take a picture of it. Do not share it. Do not keep it on your phone. You physically write the words down, because you and only you can get back in there. So what I've done, I have 2 ledgers and 2 tangems, because I'm learning what Sheldon and Kyle both have taught, and the rest of this amazing, crypto banter team at this school, to have different multiple businesses, right? If you haven't taken it yet, you will learn. But the bottom line is, and I'll tell you about all the times I've been hacked as we get down in this presentation. Again, you are going to take the seed phrase. If for God's sake, any reason you forget your password that you make, you're actually going to get a PIN number you create. You have that seed phrase, you can get back into it. People are like, oh my God, what if I lose my ledger? The Tangem is great because it actually comes with 2 or 3 actually looking like credit cards. I know that you showed them earlier. Give one to your best friend, your family. Give another one, put it in a safe. You know what I mean? But don't ever leave all of your cryptocurrency in one place. And please move it on to a cold storage wallet. I beg you. Beg you. We can go on to the next slide. Are there any questions? I do have the I'm looking, Tangem. I actually am, between you guys, I'm not worried about Ledger at the moment. They did have a little back end issue a while back. I believe it's been resolved. But I am going to eventually move everything off the Ledger. The reason why I have not yet, I do believe it's still safe. No one's touched my Ledger. I've had one of them since 2020. But yeah, just to be safe, I will move some. I'm staking, and that's a whole nother ballgame. I'm staking some ETH via Lido on my Ledger. But let me see if there's any other questions. Let's see. I've never heard of Nanix. Huh. Oh, that's a treasure model. Okay, very, very cool. Tangent is my favorite. Yeah, Tangent is my favorite as well. Just started using it. It's so great. You can literally take the Tangent and put it back of your phone. It's gonna make you type it. It's just yes. Very, very safe. Can we move on to the next slide? That would be fantastic.
Yes.
Hey. So, we kind of talked about the scams in crypto, but there's so many. So these are like my top 10. I think a lot of our top 10 never, ever, ever, ever reuse passwords. Like, for example, if you're using hello 1 exclamation point, don't set your next one as hello 2 exclamation point. They're going to figure that out. Again, never, ever. I don't care if my husband doesn't even have them. Nothing. Nope. No. That's a whole nother story. But yeah, never give your passwords. Never give your seed phrases. If you get an email that says, "Oh, your seed phrase has been compromised. Please click here." Don't click it. Don't click. When I tell you guys my stories, the fact that I'm still in crypto, if it wasn't for this team and Crypto Banter and everyone that I've met in this wonderful community, I wouldn't be here. I don't know if I would be alive because just be careful. Also, we're going to talk in depth about this at another presentation, but when you're moving crypto, and this can get a little confusing to some of you newbies. Let's say, for example, you're on Mexi or Bybit or BitGet or KuCoin, all of them. And you say, well, hey, my Bitcoin is here. And I made some profit, doing great. Or even if I want to hold it for my spot and I want to move it to my ledger, you have got to do two very, very, very important things. Number one, there's many different layer 1 technologies, right? You have ERC20, you have Polygon mainnet, you have the Arbitron network, there's so many now. Solana. You've got to move it on the same network. So, for example, if I'm going to move something from Coinbase, let's say I'm moving Bitcoin from Mexi to Coinbase, the first thing I do is make sure it's Bitcoin address. You have to go to your wallet. Let's say I'm moving from Mexi to Coinbase. I'm going to open Coinbase. I'm going to click Bitcoin, receive, and then it's going to say what network. So I'm going to say ERC20 because that's what my Mexi is on. Then I'm going to go to Mexi and I'm going to say send, and it's going to say what is the wallet address. Now I have 2FA on everything, which I highly recommend you guys do as well. I use Google Authenticator, but you need to triple check, quadruple check, check 10 times. Make sure the address that you see you're cutting and pasting is the actual Coinbase address. So take a picture and then don't share it, but just so you can have it, you have to make sure, because let me tell you something, and I have done this. If you move a coin from one, anywhere, from one place to another, and you put like BTC, Bitcoin to Ethereum, or Ethereum to Bitcoin, you cannot get it back. There's nothing you can do. So very, very, very important. See, what does it say? You need to show the information of trust of people. Yeah, they're right. So if you trust somebody, of course, like give them the other tantrum card, but you got to trust them with your life. The people that I'm giving my tantrum card, the person I'm giving my tantrum card to, I trust this person with my life. So I think that's enough about that. If you guys have any other questions, please.
Actually, I just want to respond directly to what Wayne is talking about in the chat. There was the original question is, what if I die? Then how does
No, that's a great point. That is a great point.
Yeah. And the truth of the matter is that is a conundrum currently in the crypto space, because currently, when you set up your bank account or your investment account, you identify who your beneficiaries are, and that's their way to go and claim cash. But you're talking about a 12, 24 word seed phrase and a password into a device that you maybe never have told anybody about. And sadly, I lost a friend earlier this year, and his family barely even knew he was in crypto. Me and my friends were like, I wonder if they even knew to look for it. Did they just throw out those devices?
That's
So
very,
you
very,
have
very
to,
important.
you know, as part of your estate planning, you need to think about that and how you pass that on. How I think about passing it on, and I haven't implemented it yet, is giving different parts to different people, and then, you know, upon passing, then parts are given, right? But ideally, both people, if you take a seed phrase and break it into two, then both people shouldn't be best friends. You know, it's ideal if they don't know each other, and then you would bring them together with a third party potentially.
Correct.
So just a response to that.
No, that is a very, very good point, because I even think about that now. Like the other person I was going to give this to would be like, what is a Bitcoin? Like, don't give it to that person. I do want to answer the question right here. From Chaz, is I'm in sniper school but still behind. Any advice is how to get caught up? Don't worry about it. Just go back and review all the videos. Like I think I watched Sheldon's sniper. I was in cohort 3 or 4, but I think I've watched those videos 20 times.
Yeah.
I mean, don't worry, you're never behind. The good thing about cryptocurrency and the world we live in today, it doesn't stop. It's 24/7. There will always be a trade. I personally have learned I don't get into a trade unless, you know, 4 out of 5 of my check boxes are there. But don't worry, just take your time and get into it when you can. There is no rush. We're always here. I'm on Discord a lot, so anything you can always just tag us if you have a question. Just at my name. It's Coin Diva Sniper as it is up here. But yeah, so let's go on again.
Okay.
I know another good point. Go ahead.
One thing, Chaz, is that, you know, I actually came in like cohort 5, I think. Cohort 5, but finally got figured out Discord in cohort 6, and then finally got through the classes and attended the live event. It's taken me time. It took me time to get through everything, but I stayed really active in Discord. I asked the questions when they came up. I shared the charts as I had them, right, and looked at other people's charts. So just engage in the community. It's taken me a while to become good at trading, but I really feel confident in my trading skills now, and that's because of the experience that I got with the crypto school. So don't worry about being behind. There's no such thing as being behind. This is a rest of your life sort of thing, so you'll always be learning.
No, you're right. And you know, there's times where I still go back and watch the videos. So
Yes.
I mean, it really is. I mean, the threats are out there, you guys. I mean, sharing links, the sim swaps, never ever. And get this, I have a tip for everybody. If you have a new iPhone 15 Max or 15 or above, go turn off your AirDrop, because if I'm here, if you're you, I'm me. If my phone is close to you, it automatically finds this phone. No bueno. Sorry, I live in South Florida. Un poquito español. Turn your AirDrop off. I just found that out this morning, so I'm glad that came up, because I didn't even know that. There's so many people out there. They don't care who you are. They don't care how much money you have. They want your money. YouTube comments. You know, I got hacked. Somebody pretending to be Sheldon, and we'll go into more detail about that. But they hacked into Banter's YouTube page. So be careful. You're going to see thousands of impersonations, and thanks to all of you. Thank you seriously for those that have reported it on Discord, because it happens every day. Again, not to keep talking about the same things, but if you don't know who sent you an email, don't open it. I fell for that too. I think I've fallen for everything in the book before I met Banter. Social media, that again, every single day. I mean, I apologize to those that have tried to DM me on Discord. I only have my DMs open because I have another business that I do that I have to keep my DMs open, but it's not personal. If I don't answer your DM, just at my name and I will respond back to you, because they don't care. In fact, you know, I felt bad because somebody was trying to reach me, but you know, there's viruses also. So I believe that I had a virus on my computer. I bought a new computer. I got hacked. We'll talk about that a little later, but anybody can put a virus on your computer. I do believe that Macs are a little bit safer, but I mean, I got hacked on a Mac too. So you can have all the anti-malware you want. You can have all the antivirus protection you want. They're still going to get you. I love that. But the real threats are hot chicks that love crypto. Get it?
Those are, you know, if they can
steal
make
your
you
money. No,
emotional,
I can't steal your money. I don't know how to do that, but some girls can.
you know, if they can
Ah.
evoke an emotional response from you, they've got you. If they give you the hallmark feeling, that warm fuzzy feeling, or I've got to do something now, this is a disgrace. If they can
Right.
raise your emotional state, you're going to act more quickly, right? You're ready to fire or to lean in. You're not asking questions. So that's why hot chicks in crypto, right? Oh my goodness, she loves Solano as well. Wow. You know what I mean? Be the same with hot dudes, but yeah.
Exactly. It goes both ways.
Yes.
It goes both ways. Oh God.
So scams are everywhere, they are everywhere, as Beth just finished talking about. So now we're going to walk you through some ways, like how can you spot a scam and just, stay really far away. So this one is a YouTube comment, and I didn't blur out the names. So if free will packages here, then, please don't leave these comments on this video, but I will forever be indebted to you. You've changed my whole life. Continue to preach. Now, the person who created this video is a YouTube influencer, or a YouTube crypto influencer. But you've saved me from a huge financial debt with just a little investment. Thank you so much to Jenna L. Sparling. That is not who was doing the video. Wow. So this person, this person, this person, this person, this person, this person, these are all either one person or multiple people working together. But it, they're sitting in a room just using different devices because, YouTube's like, is it the same IP? Is it the same device identifier, et cetera, et cetera. So you have to do it between different devices, and geolocations is also very helpful. But then it's like, oh my goodness, you guys are making money. I need a pro. And I keep seeing that on Crypto School. I need a pro. And if you're on Discord asking for a pro for trading, I just want to remind you that we all signed up for Crypto School. So you're not going to find a pro there.
Go learn it.
We have moderators and mentors, but there's no pro that's going to be asking you for money. Okay. So this is just setting somebody up to say, oh yes, I pay $600 a month. You can pay in Bitcoin. Pay in Bitcoin. Right.
Guess what? You pay them, you're never going to see them again. They're going to say, thanks. Bye.
It's not even, I saw in Rand's video yesterday, he was talking about new projects, and I think it was yesterday, maybe the day before, but talking about projects where people are doxxed. So for those that are new to crypto or the internet, being doxxed is like your full identity is known. We have your PPI information. We can say, yes, that is John Doe. So these people, you don't know who they are. They're not doxxed. There's no way to dox them. Even if they dox themselves and say, hey, this is me, go look at me online. Unless you do video verification with them, there's no guarantee that the site that they just sent you to is really them. Right? So scammers are reusing other people's information to create a whole persona that you are willing to interact with. So Beth, why don't you go on and talk about
sure. So this is another thing. Everybody, whenever this is done, you need to check on your own computer where you are logged in from. This is an example. Those 3 logins, none of those 3 logins were not me. That was not me. And I was like, oh my God, I've got 3 people logged in my computer. That was not me. And look this is from 2022. So of course I got hacked. And I have a Mac. And I have an anti-malware protection, as I thought I did, paying for antivirus. The day after I realized I saw that, I had an expert come completely clean my computer, got a VPN, virtual private network. You can get, if you don't have it and you're trading crypto, I can't help you. Like Rand says, I can't, sorry. Crypto Banter and all the links are in Discord. Highly, highly recommend that you get a VPN, use a VPN, and stick with it for what, $3 a month? Is that worth getting hacked for God X amount? So yes, please go onto your computer, your phone, check who's logged into your phone. It's probably one of the best things that you can do. So I highly recommend, and I do this daily. I do it daily, every day. If you guys don't know how to do that, just type it in chat, and I'll show you at the end of this, at the end of the presentation. It's pretty simple. So get this. This is the story that I mean, I've been hacked several times, but obviously Rand and Sheldon and Kyle and Dylan, everybody, Maverick, the whole team, they're getting more popular and more popular. So I find that the most scams are in Telegram, and this guy got me 5 different ways. He pretended to be Sheldon. He opened an account on Banter pretending to be Banter. Banter's not going to ask you what your salary is. Banter's not going to ask you for more money. Banter's not going to ask you anything like that. Banter's not going to ask you to contact them. Okay? They're just not going to. So, I mean, I stupidly answered some of these people. And then the one next to it is actually, I apologize, that's really not Telegram. That's going back and forth on WhatsApp, because if you can go on to the next slide, the whole story comes from that right there. I got a direct message on WhatsApp from that person. I didn't know. I'm like, oh my God, Sheldon's reaching out to me. This is great, because I had saw that school was coming. I wanted to get into school. They had hacked into the YouTube page. He put a page on, and I clicked on it. This guy was so good. He would cut and paste Sheldon's voice together and leave me messages on WhatsApp. I mean, come on, how's that not Sheldon? I mean, really? Asking me, oh, hey, if you become part of our cohorts, start out with $500. I'm going to trade for you, and then I'll teach you how to trade. Well, guess what? Sheldon's never going to trade for you. We're never going to trade for you. We'll help you trade. But I'm like, oh my God, this is so great. And it was called Aster Spot Coin. You can go on to the next slide. Thank you. And so I can keep going. Those are all messages, DMs back and forth, telling me what to do. Everything they told me to do, I did. They were pretending to be Banter on WhatsApp, cut and pasted the exact everything. And I wasn't even part of Banter until when this happened. I didn't even know they had, there are certain groups, but long story short is, I ended up losing over $300,000. $300,000. I didn't put that much. Well, yeah, I did put that much in. It was my long-term savings. I put everything from my long-term savings into it. Everything. No, I don't mind telling that number, because I wanted to commit suicide. I did. I hired a company out in Israel, and what happens? These guys are so good. They're using proxy servers, which bounce IP addresses they can do it by the minute. So the money went into Binance and FTX, and then move. I'm never going to get it back. So, lesson learned. I know Sheldon would never, ever do that. He's the most wonderful human being, one of the most wonderful human beings I've ever met. So we're never going to direct message you in WhatsApp. We're never going to direct message you in Discord. We're never going to ask you for money. We're never going to ask you for your seed phrase. We're never going to ask you how much is in your account. Now, luckily for me, that wasn't all the crypto that I had. So, I do have, like I said, things on cold storage. That's just the first time I got scammed. That's the first time. There's many, 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 many more, but please protect yourselves. Don't answer anything if you don't know it. We're not going to reach out to you. And you can go on to the next slide. Are there any questions? I will see.
I just want to, you spoke of a really important teachable moment, or I want to use what you just shared as a teachable moment. And just slowing down what you said, you got a message on WhatsApp from Sheldon, and it's like, oh my goodness, I love Sheldon. He's so awesome.
Right.
He creates such great stuff. What does he want? Oh,
and left me a voicemail. Left me a voicemail.
There's the emotion.
I mean,
that's
oh my
the emotion.
God, you cut and pasted.
You're heightened. You're ready to respond. You don't second guess, right? So it's anything that they can do to, like, phishing is all about anything that they can do to get you to act. And you have to slow down, think before you click, and really, like, all of you guys are very special to me, but you're not that special, right? Like, slow down. Don't let your ego get out of control and be like, oh my gosh, I have to respond right now, because that person on the other end is also not that special. your
And let me
security is
explain
most
too, like
important.
how I got $327,000. I don't know. Is the next slide about Voyager? I'm
Yes,
not sure.
sorry.
Okay, so
Oh, no.
okay, so let me tell you a little bit about the Telegram DMs. Yeah, we went over those already. So let me just
Yeah.
tell you how I got $327. It wasn't on my savings. It was because I was what's called an ambassador for an exchange called Voyager. I worked and still do with celebrities and athletes on a daily basis. I have a radio show that promotes, I don't anymore because of this, that promotes their charities, the good things they do. I put events together for them. So I got involved in an exchange called Voyager. I'm sure if you're here, you should know what happened to FTX and Sam Bankman-Fried, who I've also met and knew. Anyway, he put out Stephen Ehrlich. If you're watching this, I'm going to find you. Just kidding. I hope you are well. You obviously needed the money more than I did. Anyway, I work for this company by the name of Voyager. They were an exchange, just like your Mexis, your Coinbases, which I do believe is still safe. I became an ambassador and I brought on influencers for them. It doesn't matter who they are, who they were. I got into Voyager when the VGX token was like 0.00000000001, and I was able to accumulate a significant amount of money on that. Well, I got hacked there too. 2 days before they went bankrupt. The same person that was, pretending to be Sheldon. I did a very dumb thing. And I admit it, and I own up to it, and I deserve to get hacked.
Nobody deserves to be hacked.
I know. Nobody deserves to get hacked. Never give out your just don't give out your address, your wallet addresses.
But what was it? Tell us the juicy facts. What did you do?
This is a juicy fact. This is scary. This is very scary. It's really scary. Even to this day, to me, it's scary. So, my account on this fake Asper spot coin had grown to significant levels. I'm like, oh my God, my dog's having surgery. I need $10,000. I had no cash. It's all crypto. He's like, no worries. Send me your receiving address, not my sending, my receiving address. I will send you $10,000 in USDC or USDT. I'm like, oh my God, thank you. I sent a hacker a wallet address. What is wrong with me? I didn't know. So I did. I sent him my address, and it was not the send. Again, we went over that earlier. Coin to coin, send, receipt. Somehow, by him getting my receiving address, he was able to get my sending address. He drained my Bitcoin. My Ethereum, almost all of it. USDC. I'm calling the CEO, having a fit. He's like, what are you talking about? You're not getting hacked. Our network's impenetrable. They were going out of business 2 days later. So that's where the total of 327 came from, because if I told you what the balance is that I left in there, it's really, really sad. So I learned a lesson, a hard lesson. And I would hate to see that happen to anybody on this, watching this, taking the school, because we work so hard for what we do. And I am thinking about doing this full time very soon. I also work in the animal health industry. But life is short. You got to love what you do. You have to pay bills too. So don't get risky. Don't use high leverage. Don't use cross margin. But the scamming thing, every single day, somebody is watching you. They're always watching you. You think, oh, I only have $500 in my account. I only have 100. But guess what? They want it. They want it. And they're going to go after you to get it. Now, the Voyager, I was lucky a little bit because we did get like 20% back, less than 20. But after my hacking, after they took most everything out of there, it was a very, very sad day. But I'm still here because of this family. I'm just going to get like emotional. What Crypto Banter has taught me, and I can trade now. I mean, I know what I'm doing, and I had surgery on my eyes, so I couldn't see. The poor Banter people were like, "Oh my God, who's this girl? She does not know what she's doing." I couldn't see. I had LASIK surgery. I'm like, "Oh yeah, I'm still blind." But yeah, if you guys have any questions, please pop them in there. I mean,
well, before we're just about
go ahead.
to the end, so I want to just really quickly, Beth just finished talking about how you can, different things not to do to protect yourself. And now I just want to walk you through, the word is escaping me, but let's dissect one of these scams and, help you be able to figure out, oh, that's a scam really quickly, because you're not going to click any links quickly. You're going to read, check out, and move forward. So XRP bonus drop is now active, exclusive for all holders. We're distributing 100 million tokens among participants. Rewards are determined by your on-chain actions. Find out more below. So there was a link here, and the link takes us to this page, right? So the airdrop, and seeing this page that they're waiting for my transaction, that's the first sign that you should turn around and go somewhere else, because they're just going to steal your money. Okay, because why would you deposit $500 to get money back, right? Like that line of thinking is one way that they get a lot of people, and I just don't get it. I really don't understand it. So, as soon as we come here, we can recognize the fact that it's a scam. But back at the message, let's just go back to the message and let's take a look at who sent it to us. This is Ripple Events. Why isn't it a Ripple? Why isn't it a Ripple name? So this right here starts to tell me that it's different. One of the things on Twitter, and not the most active Twitter user, but I still think this is true, but you can change your name as many times as you want. So I've had people spoof being me before and, found out about it, reported it, nothing happens with it, but then gone through and used one of my other accounts to go and follow them, and then blocked all of the different people that are related to them, and to get their spam activities away from me. But I realized at that moment how deep it goes, how they're commenting on each other's stuff to really build those trust scores amongst people. So Hai Wang Jin 0101, right? This is their page. They don't have a header banner, right? It's just an X. And they have 25.7 thousand followers. Okay, so you can build up followers anyway, but that's pretty convincing, right? Like they have a lot of followers. I must actually be paying attention. But if you're,
and they could have bought those too, you guys. They could have bought those followers. Just FYI,
exactly.
They could have bought those. Yeah.
But that's what I mean. Like there's lots of ways to get tons of followers. Like it's another trust signal that you have lots of followers. You must be trustworthy. Not necessarily. But I'm a member of this community, the XRP community, and I follow people. So if this was really happening, then other people would be following them, right? So right there, not followed by anyone you're following, is a sign that this is not the person that they are saying they are. And you can use the same technique on Facebook when somebody reaches out to you in DM and they're like, hey, I haven't seen you since high school. How you been? And Jeffrey. So go click on them and then go look at who their friends are. If you have any relationship to them, like they're saying that you do, right? You should have other people in there that you already know, people that you're both friends with. If you don't, then it's probably a sign that their account is being replicated, they're being impersonated, and you may be communicating with a fake account. And one of the things about a fake account is, just like Beth was talking about, they will do many things to impersonate that person, including, recording their voice, or using their videos, taking artifacts that they have or pictures of them and sharing them with you. And in this age of AI and deep fakes, right, it's becoming easier and easier. So it's going to make it more difficult, but we have to stop, think before you click, and move forward. And that goes for even things that your friends and family send you, because if they've been hacked, they can be spammers just sending, cast a wide net. Cast a wide net.
Absolutely.
I got in there. Cast the net before they kick me out.
And that happened to me too. I forgot to mention. So I was the Cardano Foundation. I went onto YouTube and somebody had Charles, who's one of the founders of Cardano, ADA, running in a loop, and I didn't catch the loop. And it was like, oh, send $500 to the Cardano Foundation. I like to help people. I have a charity called Give to Live Now when I can. And I was like, oh, sweet. And they're like, and we'll match it. Well, we're gonna match it. And I should have thought, like, wait, if I'm giving money, how are they gonna match it? Da, da, da. Brand new to crypto. I'm like, awesome. I love helping charity, once they hit their goal, they're getting X amount back. And I'm just like, perfect, I'm in. Well, you know, at first you see the money. What they do is sometimes they put it in, but guess what? 5 minutes later, the blockchain works very quickly, you guys. Gone. Then I had to close that account. That was a trust wallet. So now that wallet's just gone. They drained my trust wallet, not just the Cardano. They drained the whole wallet. So thank God there wasn't much in there. But most people in this world are, you know, I'm not going to say most, but there's a lot of dishonest people out there. So we're here to protect you. I know we've gotten a lot of requests on the chat to do more on this, so we can set up security AMAs. I can do and we can do it together. I know Shauna and I did a great one the last marathon as well, and this one's been very helpful. But you know, you have to think, once you learn the skill, you work very hard. And I mean, I spend 12, 18 hours a day. I'm not going to lie. I spend 12, 18 hours a day on top of a day job. Sometimes it's get like 3 hours of sleep. Like, go to sleep. I'm like, no, I can't. But you deserve to keep what you earn. So do whatever you can. And everything that we've taught you, please don't just take it lightly, because again, there's been times where if it wasn't for this team, I was done, like just mortified.
Yes.
You know, people are like, I told you so. I told you so. They're not laughing at my spot bags now.
Well,
Yeah.
before we go, I want to ask, I had this video a second. Sorry for taking you guys back so fast. We wanted to revisit this, but I also want to ask everybody, what questions do you have related to your crypto security? Preferably not these items, but hardware,
Pop them
wallets,
in the
or
chat.
anything.
We've got like 10 minutes.
Yeah, we purposely left time at the end for any questions, because this is really important. We work so hard to acquire this crypto, and then it's gone in an instant.
Another thing I can recommend, even on your VPN, like I go to a different country every day. I mean, I'm here, I'm there, I'm here, I'm there. Like, because one last thing, while we're waiting for questions to come in, I got hacked again last week. No, they didn't get any money, and it was not crypto related, but there was a data breach at ADP, which is linked to my bank. So for 2 days, I'm ignoring these phone calls that Bank of America didn't even call me. That's why we decentralize the world. That's why we're in crypto. Somebody was able to, through Zelle, start zelling their own employees money to my Zelle account. So I was like, you've got to be kidding me. Bank of America did nothing. I had to stop what I was doing, spend 7 hours. Next day, oh, it's all secure, you're fine, your money's coming back. Bank account drained completely. I still don't have a debit card. Don't have a debit card. Thank God for my Revolut, which is we'll give you guys that link. But yeah, it's just everybody's good. Everybody wants something from you, but stay positive. Do what hopefully you will, and it won't happen to you. So what is the best way to get a cold storage? Okay, so the best way to get cold storage, they had a bunch of Thanksgiving specials. Maybe they have Christmas ones. Tangent, just make sure. Don't go to Amazon, please. Don't buy anything from Amazon and crypto. Don't. They're not real. They may not be real. Go to the Ledger's site. Go to Tangent's site. I don't care about referrals. I'll put a referral link in Discord for Tangent. As soon as we get off this, I'll put it under newbies chat. I'll put a Tangent referral link. I don't care about the money. Make sure you're using the authentic whatever you're buying. I just like Tangent. I think it's very reliable now. But you can use Ledger too. Changing VPN country, good point. Yeah, I do it.
Yeah. Well, one thing I want to just reflecting on what you've shared, Beth, I'm about to share in the chat. I'm missing a word. Once you've been hacked. So it's interesting how people that steal your credit cards, it's a whole, it's hard to explain. And so I don't even know why I'm trying, but from theft to actual utilization is actually just like a large pyramid. Okay. So, down at the lower area of the pyramid, you have people that are on the ground stealing stuff. So whether it be that you have a cyber criminal who has broken into, let's say LinkedIn, and got all the email addresses and actual names of people, right? So Beth, and here's her email, here's her professional email address. George, and here's her professional email address. This stuff is from LinkedIn. Cool. That is one sellable item, okay? Because that unlocks personal identifiable information on one level. So now I take that, and as a hacker, I go now out to LinkedIn and I go and look up these accounts that I have. Okay, Beth, cool. She's in Florida. Okay. And I think she's about this old. All right. Oh, and she works in sports. Awesome. Okay. So I take that information and I go and use Google or other search tools to then build an image of who that is, and now that I have that information, if you go and watch this movie, you can understand how, now that I have that, I have a really good target, a really sweet target that's worth attacking, the attacks never stop. They just keep going because they know it's a valid and a very useful money pot. And in the United States, it's very difficult. I believe it's impossible to get your social security number changed.
No, you can't. You can't.
Yeah, and for identity, people have had their identity stolen and their social security number stolen. You are constantly trying to verify who you are, and that's one of the reasons why they implemented the ability to lock and unlock your credit report, is so that if it's locked, then somebody can't leverage it to create a car loan. But if it's unlocked, then the car loan company goes and meets with this person. They give their social security number. They give a fake ID that with their picture, your name, and all of the credentials, and they take out a car loan. So please feel free to go watch this movie. As somebody who loves this space, I was very frustrated when, Hollywood put out a movie in 2013 called Identity Theft, because it totally pushed this down. And one of the things in, when it comes to money and security, is that they don't want you to know how dangerous it is leaving your money with them. They get hacked all the time. They're not telling you about it, right? And they're making enough money that they're able to just say, no, we don't talk about fraud. We just deal with it and patch up the hole. So when we start to move towards taking crypto, being our own bank, we need to take our security really, really seriously. And once one piece of personal identifiable information is out there, then it's just the hunt for more. All right. So,
constantly.
Yeah. Like if you see me on, George is my name, but when I first showed up, I was like, I don't know this Discord thing. I don't know. Hackers on Telegram and everywhere. Pharaoh George, that's it. Like, no personal identifiable information. And as you get to know people, then you share a little bit more. But in groups and such, you don't know who's listening. I've had many messages come through on Discord after watching Josh the Trader.
Oh my God, I get the 10 from Josh the Trader pretending to be him all the time. But just so you guys are aware, the Crypto Banter Discord, all of it's safe. We have that done an extreme, they have done an extremely good job of making sure that Discord is safe. Just don't click on, like we mentioned, if someone's in there saying they're going to make you money trading, that's not one of our people. Okay. But as far as you going on Discord, you can feel safe. You can recommend to your friends. You can tag us, the moderators, mentors. We're here to help you guys. So, I hope this was helpful for everybody, and I will take it to the team, and we will put some more AMAs together, because I do think it's not talked about enough personally. And until it happens to you personally, you really can't understand how detrimental it is. And I had somebody shoot themselves, literally kill themselves, commit suicide. So we don't want that happening to you guys, at all. No, we want you to make money, be successful. We've got the legend OGs coming up here in 3 minutes. Jesus, these guys are great. Can't wait to watch them. But
so sucking
hopefully
every second out of this, if somebody does, we want people to. Trading is a way of life, right? We're learning this skill in crypto school. It's something we're going to take forward, right? That's why crypto, here in crypto school, it's not about us giving you the answer. It's about us helping you identify what the answer is in your trading style. But when people are, when you go into the DMs, right, make friends. But the best way, and what I like to do, is I say, hey, we're talking here. Okay, let's become friends. And at that moment, you're building that relationship. Because otherwise you can have other people that are impersonating, they change their name on the back end and come through as something else. And for a really good scam, it's okay to let it build up for a while. That Bangladesh bank scam that I talked about at the very beginning, the estimate is that they were planning for that for about a year, because everything had to align up. And dates, Indian holiday dates plus Thai holiday and American, so it could have been more than a year, because they had to have enough of the system down so that nobody would sound the alarms. So, just be really careful. These people are really smart. There's some countries in the world who educate, come to our hackers program. We will pay you well.
Yeah,
Other
hacker
countries'
marathons.
money.
Think about it. There's hacker marathons. A friend of mine actually works for the United States government. He tried to hack the government. It's almost like an episode of Criminal Minds. So he tried to hack the government. They caught him. And then they're like, okay, he got in. So they're like, will you come work for us? Now he works for the government. Yeah.
Yep. No, that's the way it should work. Make them your friend.
But that's what his goal was. So he says, I'm like, that was not your goal. You want to go to Bank of America and steal all my money.
So who's
not
coming
much
up
right now?
Who's coming up after us?
Yeah, we are waiting for Bruce and the legend David Zier. I don't know, for those that don't know, David won a Bybit competition. I think I met him at Bitcoin in Miami. So for those of you that are going to be in Nashville this year, I'll see you there. Come to Bitcoin if you can. I think he turned something like $1,200, $600 or $700 into like $120,000 in like 3 weeks. Really? Boom! Yeah. So you guys are definitely going to watch that. And then coming up later, we've got so much for you guys. I'm going to go into detail. You guys should know what an Ether scan is. You should know how to go on a blockchain and see where your transactions are hashed. You should know how to move coins from one place to the other. So I think I'm speaking like 4 or 5 times today, but you stay as much as you can. This all will be recorded, most likely in different times. I think we're doing 4 different links. But yeah, we are waiting for David and Bruce to come up. If they're in the meantime, are there any more questions?
Hey,
I will look.
I also saw. Thank you, Chaz, for pointing that out. We're not on screen all the time. Smash those likes, people. We have about 140 people watching. We want this alpha to go out across the internet, and for people to come and join. The goal is for us to share as much valuable information, and it's just back to back information from the different moderators and people involved with the school who want to make sure that your trading journey is a success. So if you aren't watching this live but are considering getting into crypto, definitely join Crypto School. It's it's a free experience, and you'll learn so much. And the best thing you get is a community of people that actually want to hear you talk crypto, not like your grandparents. So
yeah,
awesome.
Like we're here to help you. Like it was funny as well waiting for David. Now I am not as good as Bruce and David. Okay, like if they don't show up and I have to start showing you my trade, I'll do it.
We will.
No, they're coming. They're coming. They would never do that to you guys. Yeah.
Beth, I would be calling in the reinforcements. It would be like, Eddie, where are you?
I know, Eddie, Matt's like sound asleep, and I was like, get up, get out of here. No, but I will say this, you guys, since I took school,
you actually do some really good charting.
Thank you.
You had like Beth and I, she's one of my trading buddies, and your setups are awesome. So if we had to look at your setups for an hour, I would be totally impressed. I've been thinking long term, so you don't want to see my setups. It's more about dinosaur things. But yeah,
the only problem is I haven't set anything up because I was preparing off what I don't mind going and charting something. Like that's fine. But let's give these guys a little bit of chance to show up because I would hate to like hijack their meeting, and I'm sure they're gonna be here. Yay!
Hey kiddos, what's up?
I was like, listen, if they don't come, you know what? I'm just gonna go and keep the sugar on the road. Got some setups, but we have the legend here.
Well, I gotta say, it was funny because I had the time an hour wrong. We were just
no. We all did. I thought it was on hour for, like, I thought we were supposed to start right now. So you're not the only one. Thank God I woke up at 5:30 a.m.
The calculation, because we all use New York time, right?
Yeah.
And we didn't bother to check the calculation to GMT.
I didn't either. Yeah, my bad.
Well, it's fun.
I didn't either.
David and I were both we were both in a sniper club meeting for the last couple hours, and all of a sudden he says, "Hey, we're going on in 2 minutes to the 24 hour."
Oh my God!
So,
I know. So now I'm like, I think I'm back again in 2 hours, but I'm gonna watch you guys from my phone for sure.
Yeah, that's really fun. So what have you guys been chatting about? I'm waiting for David to come on board.
No worries. We just went over a bunch of security things, and Bruce later on. I mean, she did a great job. And then later on today, I'm gonna be on with Mams, and I think Rose joining us too. We are going to show people like how to check if what is Etherscan? Like, don't put Bitcoin to Ethereum, like things like that. Everything security wise, we went over in very big detail, and also just talked about the scams and how much money that I've lost. Not that it doesn't matter. I'm still here because of this family, and that's why you guys are here. So, but it was hopefully it was pretty helpful. People want more security talks. They want AMAs on security. So, Bruce, George, and I will get together and we'll figure that out.
I mean,
you're good on the chat.
We're a little bit in the wild west, in crypto as an asset class around the world, which means you just got to be extra careful. I mean, there's all kinds of crap out there, and thieves and nasty peoples, and
yes, you're right. And one thing I don't think we went over enough is the 2FA. So yesterday, just really quickly while we're waiting for David, I was on crypto.com, got hacked. I didn't use my account for 5 years. So when I went to go back in there, I couldn't access the 2FA phone that I had. Okay. So I had to go back in to get re-verified again. Yeah, there he is. Coming. But yeah, just make sure your 2FA is always on. Hey. How are ya?
Hey, before we hand off really quick, there was a question from somebody who's still in the chat. So I just want to ask, do you guys know the question was, how do I pass on my crypto if I die? Do you guys know of like a off the cuff solution? I want them to see the charts, but I know you dye your hair that color out there.
I have a question. Can you guys see the comments in StreamYard? For some reason,
no, I can't. What I had to do is put it up. I put it on my phone, Bruce. I have YouTube up on my phone so I can see the chat on my phone because I can't.
Because when I do Dylan's show, I'm logged in and I can actually see the actual charts.
It's different on StreamYard. You just the best thing to do is open up your phone and turn the sound off, and then monitor the chat there. That's what I did.
Okay, cool. All right, we'll figure that out as we go.
I'm so grateful. I can't wait to watch you guys. We're gonna have
we're gonna watch you guys. Go get it. Join Sniper Club, you guys. Join Sniper Club. I'm going to as soon as I'm done with this marathon. One of my special athlete friends is coming if he ever decides to be not so shy. But yeah, you guys are in good hands. And we'll see you later.
Hold on. You guys should just stick around because I love the enthusiasm. It's like,
no, I can stick around, but I have to walk my dog. I'm going to stick around, but I'm going to walk my dog and I'll be right back.
All right. We'll catch you later, guys.
Be right back.
All right.
Bye. Okie dokie. Wow. Well, so David and I, we just finished a 2-hour session on Sniper Club and got pinged that we were up in 3 minutes. And it turns out, David, we weren't wrong. The calculation for New York time was off. So, but we're going to wing it, right? You're muted. I can't hear you.
What about now?
Oh, there we go.
Talking the whole time like a retard. But yeah, no.
Golden nuggets, I'm sure.
Yeah, long session there. Thought I was going to get some time to eat, but I got my green machine here, so
I've got my coffee. More coffee. and I'll probably have to go take a break and get some more.
There you go.
So, anyway, guys, so we're gonna do divide this 2-hour block into 2 sessions. We're gonna do it kind of casually. Session 1 is going to talk about what it takes from a mindset perspective to be a successful trader. You have heard, if you've been around trading for more than 6 seconds, you've heard people say that trading is 10% technical and 90% psychological, or some such numbers like that. And of course, when I first started trading back in Forex, foreign exchange, I thought that was like a crock of shit, right? It was like, wait a minute, you just got to get the markups right, and was quickly proven wrong, and have become a very firm believer that marking up charts and doing your technical analysis and all that stuff, the pretty squiggly lines on the chart, you'll learn that quickly, right? It's not rocket science. You do it for a while, you watch people for a while, and you start copying what they're doing, and then you start understanding better and being able to analyze it. That gets you to kindergarten, right? But to start to understand how our decisions are emotional, to take a trade, to exit a trade, to pull some risk, to add on, to do all the things we do, they're all emotional. It's funny because David and I have a very similar background in some of the stuff we did, and a lot of what we're going to talk about today comes from that. But one of the things that I learned and I taught when I was a sales trainer was that people buy based on emotion, and then they justify the decision by logic and reasoning. And of course, when I first was taught that, I thought that was a crock also, but it's true. It's really, really true. And so understanding the psychology when you're trying to sell something, understanding the psychology, like, by selling a car, is it a mom? Does she have kids? What's her motive, right? Is it a guy who's recently divorced and single and he's all of a sudden back out on the market again? But when you start to understand what's going on behind the scenes, it is so much easier to paint a picture of basically finding out what is it they want deep down, right? And when you understand that, it's so much easier then to help make that sale. Well, this is kind of the inverse, but realizing that we make decisions emotionally, and then we justify them with logic and reason. When you understand them about yourself, then you can start to take control over being manipulated by your emotions or the emotions in the marketplace. Give an example before I jump into this. Hold on. Let me present. Hang on. I'm going to just show you a quick overview of Bitcoin. There you go. On the weekly perspective. All right. Give me 1 second to get this ready. All right. Give me 1 second. Okay. Present your screen. Yeah. Don't show the tips again. Don't need it. This should be it. Can you guys all? There we go. Oh, look at that. So here's Bitcoin on the weekly chart, right? Let's go back in time. Back over here, back before I got involved in crypto, price was down, prices were going up and down, and it was crazy people getting involved, right? I mean, everybody's got crypto's a scam, crypto's a fluke, crypto's not real. That was the word on the streets. Some people, right, who are in spite of all that fear that was dominating the marketplace, bought some crypto, right? And then price started coming up right over here. Now, I actually got into crypto right there, right about there, right? I've been actually using Bitcoin to transfer money from my bank in and out of my foreign exchange trading account. And I was watching crypto go from basically 10,000 to 40,000 before I woke up and went, gee, something's going on around here. But anyway, I got into crypto right about there. And it was noisy. There were all these shows and YouTube and people screaming, "Oh my God, crypto's going crazy, it's going in the world." And what was happening was what we call FOMO, fear of missing out. And I was one of them. I didn't know squat. And so I started just buying more crypto, right, as things were going up. Here's the thing to know. When someone's buying something, someone's selling it to them, right? So when I was buying, me and all my retail traders right over here, friends, were buying crypto. Who was selling us the crypto? It was these guys. The guys that bought it down here, who were not afraid when the world was going to hell and was going to go to zero, who were willing to take the risk and bought it. They started selling when the retail traders started buying. And we bought all the way up to 60,000, right? By this time over here, the whales had basically sold off a lot of their holdings, right? And were in cash because they knew things go up, things go down, right? And then we kept on holding. Now we were getting into fear. Oh my God, oh my God, oh my God, oh my God, it's coming down. And what's happening is, as prices dropped down further, retail traders started selling. They mass sold right here. Who bought? These guys. These guys said when things were red, when there was, what they call in Wall Street, blood in the streets, the whales started buying again, right? And they started accumulating. And it wasn't until up over here that the retail traders started coming back in, doing the same thing over and over again. And the retail, think about it. There are a boatload of people who were buying Bitcoin like crazy at 69,000 because the world was going, Bitcoin is going to 100, right? Plan B, it's going to 125 or whatever it was. And then the whales had been selling their cheap Bitcoin for very high prices. And then we did it again, right? So fear and greed and understanding how those things play in your, not only the long-term perspective, but in the day in, day out trading perspective, is really being honest about that. Understanding how that works is the key to successful trading. And our goal working with you guys is to help you do that. So that's what this session is about. David.
Yeah. No, yeah, let's talk about mindset. I think the 6 inches between your ears is the most important part. And it could really destroy you or it could really make you. Mm-hmm. And, it's amazing whenever I got a chance to connect with Bruce to find out that we kind of grew up in the same industry. The industry that we grew up in was very heavy on something that they call personal development. And the question you have to ask yourself is, what are you feeding yourself on a daily basis as far as the thoughts and the information you're receiving? I think 90% of our thoughts are negative by natural human behavior, and you have to monitor your thoughts. So if you know that majority of our thoughts are negative, what are you going to do to change that? And for me, I'm always reading books. I'm looking at different ways to advance myself personally. I don't watch the news. I don't, anytime there's something negative that's going on, I just steer away from it. I try to surround myself with positivity. And, I know the topic of discussion here is who do you hang yourself around with the most, right? They say that you're the sum you're the sum of the 5 closest people to you.
Wow. Yep.
And so, look at their bank accounts and then look at your bank account. Chances are it's probably around the same figures. And this is a harsh thing that I heard from my mentors, because I used to be broke, busted, and disgusted, as they said. And it wasn't until I started to surround myself with successful people and millionaire mentors and hearing how they talked and copying how they talked and, what are the books that you're reading, and they go read the books that they read and just really dialing in that part. And what's awesome is that has translated over here, because once you've internalized these kind of things, they're kind of with you forever. And I think, because a lot of people ask me, man, how are you so calm? Like, how are you so it's like nothing phases you. And it's just, I think it's really, my mindset. Yes, my mindset. And I've gotten my mindset by feeding myself positive information on the daily, right? When I wake up, I tell myself every day in every way I'm getting better and better 50 times. You know, that's something I learned from my mentor. I'm constantly uplifting myself, trying not to get myself down, because it's easy to get down. It's easy to beat yourself up. It's easy to, not give yourself credit and complain about yourself and then blame people and blame this and blame that, never taking ownership. And until you take ownership of your losses or your troubles or the challenges, the adversities that you're going through, you'll never be able to get past that. And it's sad because some people just, that's how they live their whole lives is, negativity. And, I'm here to tell you guys, and Bruce is here to tell you guys that there is another side to that. And it's a lot better lifestyle.
It's true. It's really true. And that you become who you hang around operates on so many levels. So I've had, as you can tell, I'm older, gray haired, all that stuff, but I've had the opportunity to get good at a couple things. I use my recent one, guitar, right? So I started taking guitar lessons and I got to a certain level, and it wasn't until I started playing with people that were way better than me, way out of my comfort zone, that I started really improving. And it was subtle, right? I would watch how they play. I would notice how they listen to music. I would listen to the comments they make. I would get the critique they'd give me because they were way better than me. I'm talking about Grammy award-winning guitar players, and it's just absolutely amazing. And by opening yourself up to being in a community of amazing musicians, I found that little by little, I stopped being kind of an average amateur guitarist and started to really improve. And it was not because I played my scales better. It was not because I knew more songs. It was not because of, it was something else, right? It was, my mind started thinking like a musician because I was modeling my behavior and my thought processes after other musicians who were really, really good. And I can think back on all the things that I've done. It always took that. When I was trading foreign exchange, I joined a group. I paid $2,000 for a course to learn how to trade. But it was being in the community of professional traders that I started to get the feedback, get the insight, get the little subtle things that started to alter the way I perceived the actual decisions I was making, and the attitude. And then when I joined crypto, got into crypto, joined sniper school, that was when things really took off. I was trading well before then, I was making good money before then, but things radically changed by being in a community of people that could call me on my BS, right? That could help me through bad days, but also just like watching how do they deal with situations. You're in a trade and there's drawdown, it goes red. How do they handle it? You watch they do it. One of the things I love is when I watch, trade goes into the red. Watching David's attitude, for example, is brilliant, right? It's a reminder that, hey, relax, chill out. Your brain works better when you're calm, and to just work your way through it, how to manage that process through it. So being in that community, being who you hang around, is way more vital than we ever give it credit for.
No, 100%, man. 100%. Yeah. Also, I know that I think Luba said she would be able to relay some questions since we can't comments. So you guys feel free to ask your questions about mindset stuff while we're on this topic for the next 38 minutes.
Yeah. So Luba, where are you going to post those? In 24 comms? I hope. Just tell me where to look. Anyway, so David, I would love to, before we start, what are some of the books and influences you use that have helped mature your thought process, your attitude, your whatever?
Yeah, there's a gentleman that I really listen, a lot of his stuff. You guys can look him up on YouTube, but his name is Jim Rohn. And
how do you spell that? Jim?
JimRohn. Got it. And a lot of it still applies today. He used to be like a farmer. He grew up on a farm and he became a multimillionaire. And he talks about how his mentor took him under his wing and that his mentor was very successful and just listened to everything that his mentor told him and changed the way he thought. And it basically changed his entire life. And I just love the way he talks. Darren Hardy is another good guy. He's more about, success and business thoughts and the compound effect. I'm sure some of you guys have heard of Darren Hardy. And yeah, I think a good book is Think and Grow Rich.
Hello.
By Napoleon Hill.
I was going to mention that. Do you know that you remember the first line in that book?
No. I'm sure
the first line in the book gives it away. The first line in Think and Grow Rich is thoughts are things.
Yeah, thoughts are things. Thoughts become things too. A really, really good one, which I recommend everybody to watch, is a movie called The Secret.
Oh yeah.
Yeah, and that talks about something called the law of attraction. It's a real law, and it talks about like what you focus on in your thoughts, you get more of that. So I don't know if you guys ever had those days where you roll out of bed, you stub your toe, and then you're like in traffic and you get in an accident. It's like Murphy's Law, like what could go wrong will go wrong. And it's like your whole day is just spiraling. And it was from that one negative thought that you had from waking up on the wrong side of the bed and stubbing your toe. It's like a spiral effect. And you just end up getting more of what you think about, period. Exactly. So if you're thinking about your losses, for example, in trading, and you're thinking about how you're just like terrible at trading, well, guess what you're going to get more of? You're going to get more losses and you're going to get more of terrible trades. But if you take a step back and you focus on like what you're grateful for and what you do have and focus on those things, you end up getting more of that. They say attitude of gratitude is what attracts more positive things into your life. And it's so weird because when you start to change your mindset on this kind of stuff, the weirdest stuff will start happening in your life. Like the weirdest events, people show up, things happen, and it's like, it's unexplainable. And a good example is like my whole story of how I'm even here right now. Like I went to, so if you guys don't know my story, I wasn't even going to go to the Bitcoin conference. Like I had no reason to, but I started to do well in the competition. And my whole goal was like, okay, maybe I should go to the Bitcoin conference just to let them know, like, it's me, like the guy that's in the competition, like that's me. And so I ended up enrolling into the Bitcoin conference, and it was like whatever, like $1,000 or something, like I forget how much the registration was. And then it turns out, so I get there like on Tuesday, and it turns out the ticket that I bought, I can't even. And the thing is, I had like a company event, so I had my flight was to leave Friday morning, and the ticket that I bought was only good for Friday and Saturday. So it's like I bought this ticket. I thought I was able to go on Wednesday, Thursday. It turns out if you wanted to go into Wednesday and Thursday, you needed the $10,000 whale ticket. So I was like kind of down, like, dude, I flew to Miami. And I'm gonna be sitting around for a few days, and the crypto banter party's on Thursday. I'm flying out Friday morning, so that was my whole plan. I get there, just chill, whatever, maybe meet some crypto people, and my whole goal was just to hopefully meet crypto banter on Thursday night on the crypto banter party, just to say, hey, my name's David, and I'm the guy that's doing good in the competition. Like, I got to fly out tomorrow. See y'all later. And the first day I get there, I'm like, I need to go get some sandals because I forgot to pack them. And I want to go on the beach, like Miami. This is Miami. Like I might as well, if I'm not going to be able to go to this Bitcoin conference, because the $10,000 ticket, I'm not going to spend $10,000 for this whale thing. Let me get some sandals and let me go to the beach. And I go into this random weird shoe store, and freaking Ran is right there.
Yep.
Like, what are the odds? It is extreme. It's like impossible. Like the odds of all of those happening, it's like impossible. But in my opinion, this is based on my experience, it was the law of attraction.
Yeah, absolutely.
And again, the weirdest stuff, the weirdest events, the things that happen, it was just like, you know, and the very next day I'm doing this podcast with Sheldon. It was like a movie. But and even people were telling me, he's like, man, there's a reason why you met us like the way you did. And and I just went with it because I've experienced the law of attraction before many times. And it's because I watched that freaking video 10 years ago, over 10 years ago. So the moral of the story is there's a law out there called law of attraction, and it's about feeding your mind with positive thoughts and attracting success, not hoping for success. It's attracting success. And it's a law that can happen for every single one of you guys out there. There's no discrimination. There's no, well, you have to have X, Y, and Z to be able to. No, you could be, you know, from zero to hero, as they say, and see success. And there's so many people, I think, like Grant Cardone, if you guys know Grant Cardone, I think it was like his late 30s or 40s whenever he made his first million. But up until that point, he was broke. And now he's like one of the most successful real estate gurus, you know, and you'll hear all these crazy stories where people didn't even have success till way later on. And I think it really comes down to what I said in the beginning of this session here is the 6 inches between your ears and what you're feeding yourself and how you're thinking. So
it all is. And it happens on a macrocosmic basis, like the for him to run into Rand in a shoe store. How crazy is that? But it's not. On the macro basic, he'd been holding that attitude and attracting that connection. And it took time, right? It didn't happen the day he went to the shoe store. He'd been holding that attitude and working on that stuff for a long, long, long time consistently. It also happens on the microcosmic basis. Tracking your attitude and emotions as you're even going into a trade, because this is a trading seminar generally. But I mean, I'm giving an example of this going kind of the shorter time frame. Let me how do I do this again? How do I bring a screen back up? There we go. So like here's a trade that I'm in. I rewound the time for you. So knowing how your emotional mindset and your positive mindset is will allow you to not be subject to stuff. So for example, here's price is on theta, trade I'm already in, right? And price is coming down. And look at that nice big red candle. How do you feel, right? When you get into theta. Now, I've marked it up, right? I see the intersection of the Fibonacci 618 and that trend line, right? And kind of a decent horizontal level right over there. So this should be a pretty darn good trade. But what happens is that the minute you start seeing candles like this, you get afraid, right? Boom. Holy crap, I'm toast. Oh my God, right? But if you are able to acknowledge that fear courses through your system and that all it is hormones and chemicals being released in your brain that are causing a physical reaction, and that you've got to trust your setup, right? Stop loss, set up everything. You then can stick with what turned out to be a great entry, right? Still afraid, still scared, but I'm going to do it anyway. And then boom, right? It was a good entry because it was a good entry. And my fear, right, was causing me to hesitate, right? So the question is, when you experience it, because here's the thing, it's never going to go away. I'm warning you right now. When you see that red candle coming down to your entrance, your heart is going to pump faster, right? When it's feeling like that, can you maintain calm and stick to your plan in spite of it? And inversely, right? My plan is to take profit right over there. When price starts getting up over in this section, trust me, what's going to happen? It's going to be coming up over here. I'm going to go, oh my God, what if it goes to the moon? FOMO, right? Fear of missing out is going to start to drive me. And that's the point. You got to go, okay, that's the emotion. What's my plan? And stick to it. So whether it's on the macrocosmic whole change of your lifestyle basis or decision by decision, this stuff is huge. And all these little decisions are where you're actually managing to manage the emotions and stay calm, cool, collected, regardless of what the candles are doing and price is doing, all those little decisions add up to becoming more of a confident, law of attraction kind of person. And of course, that doesn't happen in isolation. All that comes back to, again, is being around people who've already done this, right? So David and I have been working together for a while, but especially now that Sniper Club kicked off a little over a month ago, I am so grateful I get to work with him on a daily basis. Why? Because he infects me with his attitude, right? His positivity, his calmness. I'm pretty calm to begin with, but his calmness reminds me to do that. And, because we're all vulnerable, right? We're all human, right? There's Sheldon nor Dylan nor none of these guys. Nobody, there's no gods or goddesses around here. We're all just men and women who are, have the same emotions and fears and excitement and hopes and aspirations and all that stuff as everyone else. But by being around our trading club, right, I can be influenced day in, day out in a way that moves my progress forward and hopefully yours too. It's priceless. It's really priceless.
Oh, thanks, man. Yeah, it goes both ways, man. I think it's just everybody, you and Dylan and Sheldon. I mean, I get positivity and different mindsets just by hanging around you guys as well. So it's just a nice collaborative effort.
And you learn too, right? I mean, it's not just the emotional side of it, though that was where our subject matter is today. But, I sit and watch Dave when David and I are working together and he's doing a setup on the screen, which the second hour we're going to do more of. Man, I'm watching like a hawk. Why? Because I'm learning, right? I don't care how good a trader you think you are, how successful you are. Man, I've got a rule in my life, and I'm an old fart, but this rule has kept me young, which is the minute you stop learning is the minute you start dying, right? Our brains, from the day we're born, our brains are learning machines. What do children do? They're learning how to, oh, that's my hand. Oh, that's my mouth. Right? They drop things off the high chair. They're learning object impermanence. All of this stuff is their brains growing, which is why children learn so much and grow so much. I mean, they go from nothing to being, like my daughter. I remember when I held her in the palm of my hand and she could barely babble, blah, 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 blah. And now she's going to med school next year, right? How'd that happen? Well, the thing is that so many adults operate in a curve. As you make such amazing progress all the way through college, all the way to get your job, and you go kind of, okay, I got it, and you stop learning. And the minute you stop learning, I'll swear you start dying. Brain starts going, hey, you don't need me to do anything anymore? Okay. And they know scientifically that if your brain is learning music, math, languages, that sort of the brain, you actually, no matter how old you are, can get new brain mass. That's a concept called neuroplasticity. So constantly be learning, constantly absorb new stuff. And that's one of the other reasons that you want to be, again, around people that have achieved success that you can then model. It's physical, it's mental, it's emotional, it's all together. But to me, it's really crucial.
Oh, 100%.
Do we have questions or anything that I haven't seen stuff and I don't have YouTube open?
Yeah, let me just open up YouTube and scroll back because I think maybe Luda had to head out there.
Yeah, I don't know where it is.
Okay.
Here we go. Hang on.
Cool. Okay, here we go. Are you reading it too?
No, I'm behind the. Oh, there we go. All right. So what do we got? Oh yeah, Earl Nightingale stuff. I'm seeing. Okay, now I got it.
Cool. People are with it, man.
Yeah.
People know the law of attraction. Let's go.
Yeah. We
are the creators of reality. Exactly. You guys can create whatever life you want. And thankfully we have crypto because it can make you go faster.
Exactly. Yeah, Jason Hancock says, how many people want to be around shitty people? You would be surprised.
Yeah. The people, the people that love spreading rumors and gossip, like you bring them around a positive room, they hate it. Like
I know.
No drama. They just, they go crazy. They have to find some kind of way to.
And yet we ask advice from people that have give me a break. How many of us have gone into a bar and heard Bubba, who's sitting there, 4 martinis in or 4 tequilas in or whatever, start spouting off attitudes about politics or money, right? Crypto's rah, 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 like this. You start, the thing is, you sit next to that person, you start listening to them, they get in your head. It's like an infection, right? Or how many people give medical advice? Are they a doctor? Did they go spend 8 years in medical school internship and residency? And yet we listen to these people give us advice in domains they know nothing about, and they infect us. You become, you hang around unhealthy people, you will become unhealthy. It's kind of amazing. So,
It's funny because you hear, man, like all the people that were talking smack about crypto, like maybe you guys can relate with friends and family. Oh, that's a scam, the zero.
Yeah,
they're probably broke, right? They're probably. It's funny. My mentor used to say, "Man, negative people have negative bank accounts."
Right,
and it's so true.
It
And
really
I remember he said that at a meeting once, and I was just like, "Dude, is he like reading my mind? How does he know that?" But it's just a fact. Like, surround, again, it comes down to surround yourself with people that are aligned with your thoughts, and find if you're in a city and you don't know a lot of people that are into crypto, like there's got to be some kind of community somewhere, some kind of meetup or something. Like surround yourself with those guys, get the alpha, right?
Absolutely. Oh, there we go. Hang on. I was trying, like, why am I having trouble finding my StreamYard thing? So cool. So yeah, what are the questions we got here? Do you see anything interesting? Everybody's just agreeing with us. I hate when people agree with us so much. I want to go, hey, you're wrong. Got anything there?
No, it just seems like people are vibing off of some of the stuff we're seeing. And
Dwayne is asking, is the timestamps in South African time or GMT? I think the timestamps are supposed to be GMT. Chaz is saying haters are going to hate, ball is going to ball. Hello. And Oyate Tatanka, always remember everybody is everybody's teacher. There's truth to that. There's truth to that. Absolutely. Chaz is talking about mental toughness. Hold on. Chaz, I love you. Mental toughness. I'm new, and I think I'm losing it because when I see red, I'm excited now where I used to shit my pants. Yeah, that's exactly right. Let's go back to the charts for a second. Hang on. Go back to the charts for a second. But that's exactly right. Where do I bring it back up? There we go. I mean, give me a break. You start seeing red candles, and you will see lots of red. Like you're coming down over here. It's red. You get scared. Oh my God, my investment's going to zero. I mean, we get on shows, David and I, and people going like, "Oh my God, Bitcoin's dumping." Here's the thing, and I'm going to switch subjects on this. Hyperbole, exaggerating stuff, also throwing, like, if a token is moving in a certain direction, talk about the token moving in that direction. The minute you add the emotional trigger to that, all of a sudden, instead of it being something methodical you can deal with, it becomes an emotional reaction. I'll give you an example. Yesterday, right about here, who was I on with? I forget who it was. All of a sudden, right in the middle of the show, somebody says, "Oh my God, Bitcoin's dumping! It's going to hell!" Right? They freaked out, right? And all it was just a normal move down. It was barely anything at all. But what happened was it was 1.5%, which is kind of cool. right? Because the emotional reaction to that is, oh my God, I got to get it. I'm scared. I don't want to lose. I don't want to get hurt. That's the initial reaction. Once you've become a better trader and you've been around the block and you've got these influences, when I see a move down like this, I get excited. All that means to me is that we're going to have better setups, right? You know, when something's pumping, let me come back to my theta trade. There's no way you can enter trade like that safely, right? It's too late, right? It's only on these red candles right over here, right? Only on this thing right over there, when things are red, that you can get a setup. So thank God for the setups. Thank God for the red candles, because the red candles print a retracement that comes to a beautiful entry zone to be able to take profit in. If fear is driving you, you will wait and hesitate and get in later where A, you're not going to make as much profit, and it's a much riskier trade, because if you get in a trade later and your stop loss is under the wick, now you're talking about a 3, 4, 5, 6% stop loss instead of a 2.5%, 3% stop loss. It's like night and day. So recognizing that you used to shit your pants and that now you can be calm, and that you're excited by the retracement because you can good setups. That's a huge step, guys.
100%.
Yeah, and Jerry, my man, Jerry Laban, half of the influences seem to be negative. Okay, I'm going to say stuff controversial again. I do that. I admire so many of the people that have built these great audiences on YouTube. Love them dearly. I've learned a lot, but they want people. They're looking. Some of those titles are clickbait. They want people to log in, and what gets us logging in is freaked out faces and stuff. Oh my God, go to zero. Oh my God, go to the moon. All that stuff is to get people to come in there. Now the content hopefully is a lot better than that, but just don't be manipulated by it anymore, right? Look at the chart and go, is this good for me? Good setup coming? Great. Is this thing pumped already? Okay, I got to chill out and wait for a better entry. Yeah, don't be influenced by other people's opinions. Oh, there we go, David. OP, you guys learn about OPO?
What, OPO?
Yeah, other people's opinions.
Oh yeah, they don't really matter.
Yeah, OPO. We listen to people that, other people's opinions don't get you the result you want. Bottom line.
Yeah.
If you're making trading decisions and investing decisions on other people's opinions, it will not work. I'm going to give you an example. When I was in trading Forex, this is quite a while ago, I spent money on the course, did pretty well. It was break even, doing all right, not particularly happy with it. And but as part of the fortune that he paid for this course, you get a private session with the guru, the main guy. And by the way, for the 2 marathons ago, Nick Sean was, I actually spent an hour interviewing him. He's brilliant. He was on our crypto marathon. He creates crypto with me too. He's a great guy. So I had a private session with him, and he looked at my charts and looked at what he was doing. He says, tell me about your day. What do you do? How do you choose what to do? I said, okay, well, the first thing I do is I get on your show and I watch your setups and I try and take those trades. And then I go into Discord and I look at this person and that person because they're really successful traders. And I copy their setups and I take their trades and blah, 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 blah. And he says, okay, got it. Here's what you do. I want you off Discord. I want you off Zoom. I want you off YouTube. I want you off Twitter. I want you just go back and sit by yourself in your room with your own setups. Don't listen to anybody, and take your own trades. And I don't want to see your ass again. Literally what he said, I don't want to see your ass again until you're profitable. And nice. I went away from that going, no, he doesn't like me. He's trying to get rid of me. And I was like, pity party for a second. And he said, all right, let me give it a shot. 3 weeks, I didn't get on Zoom. I didn't get on YouTube. I didn't get on Twitter. I just sat in front of the charts and took my trades. And the weirdest thing happened. I learned to trust myself. 3 weeks later, I came back and literally my average P&L had doubled in that time.
Nice.
Guys, this whole thing that we do in this crypto school and in Sniper Club, it's not for you to be dependent on David's calls or my calls or Sheldon's calls. The whole thing is designed so that you become a trader, hopefully that's 10 times better than we are, right? And at first you don't know squat, and then you know a little, and you kind of need your trading wheels, and that's cool, right? And it's great to be in the community, and I never want to lose that. But at some point you are going to have to learn to trust your own analysis, because until you become fully responsible for your own decision making financially, it ain't going to happen.
No, for sure. Let's see if there's any new questions here.
Oh, I love this. Hold on. Dave, jump into this one. This is a good one for you. Keel 786. How do you manage screen and chart time versus mental wellness and balanced lifestyle?
Yeah, no.
Yeah.
You know, for those of you guys that don't know my situation, I run a company, and I've got basically a single father, raising my daughter and picking her up from school and doing all that whole, you know, responsibility there. And then I've got my music stuff, and yeah, I go to the gym 4 or 5 times a week. So really it comes down to your scheduling and your planner. Like, I have this amazing planner. You can get it off of Amazon. But it's called the Full Focus Planner. And I literally, like, I already know what I'm doing the next day. There's no guesswork.
Yeah.
And if you find it hard to balance certain things in your life, then you have to kind of look at what you're already doing, and you need to cut out the stuff that's not getting you results that you want. Right. Sometimes that could be watching your favorite show. You know, Netflix is great, and Hulu and the series and this and that. I don't watch any TV, guys. I don't watch any series. I can't tell you how many people try to start a conversation with me about series and the stuff that they're watching. And I feel kind of stupid because I'm like, oh, that sounds cool. And I, you know, in the back of my mind, I have zero plans of watching it. But that's just a habit that I've gotten into because, you know, and shows are great, right? I like to watch movies and funny stuff, but that could also be a very big time killer for most people. And it was for me back in the days, which is why I created the habit to not do that. Right. You know, maybe waking up a little bit earlier. If there's anything I would recommend you guys do, go get a book called Atomic Habits.
I was just going to say that.
Dude,
absolutely.
Book. It talks, there's so many like life hacks in there. And like, you have your already, you know, like, for example, your morning routine, right? Let's just say you wake up, you brush your teeth, you get a cup of coffee. Well, they're saying, like, in the middle of your routine, add something new in the middle of the routine. So one of the things I started doing is drinking water in the morning, because I never really drink water. I just go straight to an energy drink. I started doing some research, and friends tell me you should drink a bottle of water in the morning. So now, as soon as I wake up, I have a bottle of water next to my bed, and I just chill for a second. I just drink this water. And now it's a habit. And so I started to take it further, and not every day of the week, but now I wake up extra early to go to the gym. And I hate going to the gym in the morning. I'm not a morning gym person, but I'll go to the gym just to get cardio in. And I hate cardio, freaking hate it. But now I'm doing it. And I used to dread it, but in Atomic Habits, it talks about when you experience something that's positive for yourself, your mind basically backs it up and says, this is actually a good thing that you're doing. You feel great. So now your mind is kind of chasing that good feeling again. So now that's something I used to like dread, like I would never. And the reason why is because I was in the Coast Guard for 7 years, and I had to wake up at 5:30, 6 o'clock in the morning every day. And I hated it because I hated my job, and I would just dread going to my job. So my mind kind of already associated with waking up early and this whole, you know, it's just like, I'll just do it later. I'll do it in the afternoon. But now I've created this habit of going and doing things that I thought I would hate. And now it's like, okay, it's great. And it's awesome because I'm on the treadmill and I'm watching like YouTube videos and updates of like Bitcoin. Like, I'm getting all my analysis earlier in the day now. So it actually gives me that extra edge for trading now. So there's like all these it's like a huge compound effect just by changing just a little bit of my habits. So if you haven't got that book, get it. And if you feel like you don't have time for how do I balance charts and stuff like that, I guarantee you will find a way to balance it.
Yeah. That book is really amazing because it really talks about the fact that real success is a matter of fractions of an inch compounded. It's not about getting a big trade. It's by being a tiny little bit better every day, right? He talks about, he was a consultant to sports teams and how you take a losing sports team and turn them into a winning sports team. And it was just, okay, we're not going to try and beat the top guy. Let's just get a second faster. Let's just get one tiny little bit stronger today, and then do it again tomorrow, and then again tomorrow, and then again tomorrow. And what happens is that when most people are riding on their laurels, if you're making tiny little improvements every day, you will never notice that you've made a huge leap. It's like watching a child grow. If you've got a child, I've got a couple kids, and it's like you don't see them growing, but someone who hasn't seen them in 6 months says, "What the hell?" Right? "Oh my God, you've gotten so tall, you've gotten so big." That's it. He talks about melting snow, I think, or melting ice as one of his analogies, if I remember correctly. And that if you have an ice cube and you just stick it in just a little bit above zero, a little bit above freezing, a little warmer than that, little by little, that ice cube will melt. Barely notice it, but over time, that compounding adds up to a melted ice cube. Boiling water, me learning guitar, right? I like David, I have a calendar. I get up really early because most of our stuff with sniper school happens. I'm on the west coast of California, happens very early. So I get up at 5 in order to prepare to be ready by 6 for the work that we're doing. And then what happens is that I've got scheduled when I'm going to do each of the events I do. I've scheduled when I eat. I've scheduled when I go, work out, which has taken a backseat for the last month, but I'm getting back to it. I have scheduled when I'm going to pick up the guitar and practice, et cetera, et cetera, et cetera. It's habits. The results come from habits that are healthy for you instead of habits that are not healthy for you, right? So yeah, big stuff. Thanks for bringing that one up, David.
No, it's good. It's really good. And again, that's part of like the basis of what we're talking about here is like feeding yourself positive stuff every single day, whether it's reading 10 pages of a book a day or watching something on YouTube, whatever. Another life hack that I want to share with you guys too, and I didn't know this until this year. I have like ADD, so it's hard for me to read sometimes. But this guy, it was a life hack. He said, if you get the audiobook and the book at the same time, and you basically listen to the audio as you're reading the book, like your brain absorbs that much more. It's a crazy compound. Yeah. So that's what I've been doing. And it's like, you can pause the audio, highlight what's important, review it, then push play again. Sometimes I don't want to read and I just want to listen, and then I kind of listen in, zone in, and then I pause it and reference back to the book and making sure I'm picking up the nuggets. Because sometimes, we just read because, I just need to read. And then you kind of just read and don't really pay attention to what you're reading and then go on to the next thing. The whole point of reading is to become better and to learn something from it, right? So cool little life hack. And
Mark calls it habit scaffolding. Kind of cool. I like that. So, yeah.
Oh, by the way, Bruce, David Bowler said in 3 minutes, we need to transfer to the second stream.
Do we have to go to a different Zoom? To a different,
yeah.
What are we doing?
So this will completely end, and then we have to start on that one.
Oh, so we got to log off and then log back on?
I think so.
Yeah, we're going to be moving to the second part of the marathon, and then we're going to continue your last hour from there.
Okay, now do the YouTubers that are watching this, do they have to do anything?
They just need to swap streams, but the link's going to be posted in the comments as well as in the description of the stream, I believe.
Cool. All right. Well, we got 2 minutes. Is there any last question that David I can do in the subject before we log off and log back on again. Thanks, David.
Yeah, let me see if anybody.
No, look, you guys are just giving us a lot of yeah, me too. I was hoping for some good questions, but you guys rock. I love you.
Cool. Yeah, I guess we can go ahead and transition now, just so people have a few minutes. If you guys want to take a 2-minute break.
Take a 2-minute break. We will be back on the new YouTube and our new StreamYard. We'll see you back in a second, guys.
Yeah, we'll do some charts and get into some technical stuff.
Peace, everybody.
All right, for everybody watching this stream, the link to the second part of the stream will be posted in the comments shortly. Please just move over there, and then Degen Dave, and then Bruce will continue on from there. Yeah, that's pretty much it. It should be in the comments, description of the video, or like I said, posted in the chat shortly. There you go, it's in the chat. Everybody move on there. We'll see you shortly. Peace.